Good morning, everybody. Welcome back to another episode of the Market Open. It is Monday, March 31st, 8:47 a.m. Eastern Standard Time. We are officially on the final day of Q1. And based on what happened last night with the futures and overnight trading, along with what's going on in the pre-markets, yeah, we're red. We are red. I think this comment right here on the screen kind of explains how bad it is. But we got a lot to talk about today. We got a lot to go through. I actually think we're not as effed as some people may be thinking. Quite frankly, I mean, I hate to be the guy that says this, but it feels like we're bottoming a little bit more than it is that we are going downhill. I saw a tweet this morning that actually encompassed my reactions to like what's going on in the markets perfectly. It's too late to sell because there's a high probability that you're selling into the lows, but it's too early to buy the dip theoretically because the dip can keep dipping, the knife can keep falling, et cetera, et cetera. So it's one of those situations where you're effed either ways, but hopefully we are not effed as badly to the downside if we are bottoming soon. There's a lot of stuff that's happening right now, a lot of stuff that happened last night. I'm sorry I did not have the Sunday's future show. I slept at 5 p.m. yesterday, expecting to wake up by 7, and then 7:45 would be the show last night. I woke up at 12 a.m. And as soon as I woke up, I checked my phone. I had like 17 notifications from Robinhood saying SoFi's down, Robinhood's down, Palantir's down, Nvida's down, Bitcoin's down. And I was like, yeah, I'm going back to sleep. I'm going back to sleep. So just went back to sleep. I think I caught up on all the sleep I missed during the week when I was traveling to California. I didn't really sleep on Saturday, to be honest. So Saturday, I just had a bunch of stuff to do. So I guess Sunday is when I caught up on sleep. But regardless, we're here today. We got a lot to talk about. I think there's actually a lot of benefits to April as well. There's some charts to look at in terms of how April works out historically and what that could mean for the broader markets. A little bit of hopium there. But in general, let's talk about the volatility as we get into the show today, which is coming from none other than the T word, one being Trump, the other one being tariffs. So let's get into that. Thank you, everybody, for being here. Good morning. Good morning. Andy, Erwin, Martin, Melanie, Ahmed, Walter. What's up? What's up? Good morning. Matthew, thank you for being here today. Alex, Andrew, Sebastian. The S&P 500 is down 10% officially from peak to trough as you look into the pre-markets, and we'll talk more about some of these technical levels and what's going on there. Gene, what's up? Steve, Eldridge, Anton, Josh, BJ, Luna, Chris, Sebastian, Anthony. Thank you, everybody, for being here today. Quick update on the Tesla, since we didn't do a stream since I got the Tesla. But yeah, officially picked it up on Friday. Brand new Legacy Model Y. So they're not making these Legacy Model Ys anymore. But there's my pops with his Tesla. He is really excited for the car. He loves the car so much. So he is super, super excited for this thing. It's his first non-ICE vehicle. It's been a long time since he got a new car. You guys know he did get a new car last year, but then it ended up crashing when we were in India. So he kind of had to get rid of that car. So this is his first like actual new car in a long time. And it's beautiful, beautiful, beautiful cover. Absolutely love the color Quicksilver. I didn't know what to expect getting into Quicksilver. I liked white, or I liked just plain black, but Quicksilver is actually very, very beautiful. And yeah, we have FSD on it. We have the 1 month free trial right now. I'll be paying like $99 a month after the free trial runs out. But he's been driving it all weekend. He's not driving it to work yet. He's trying to get more comfortable with the car before he starts officially taking it to work. But he loves it. And it's a beautiful car, and it drives like a video game, and like, you know, he's getting used to what it feels like to deal with regenerative braking and all that stuff. So yeah, super awesome car. Officially got it. We have 2 Teslas in the family. I hope one of them don't get keyed anytime soon. There's a lot of videos that came out over the weekend around Tesla that we'll talk about as well. Let's just say the Tesla protesters are getting aggressive. Very aggressive. And so we'll talk more about that. And if anyone wants to see this video real quick, I'll just play it. It's 9 seconds. In Hindu tradition, when you buy a new car, you have to crack a coconut before you officially like purchase it. So I took like 4 attempts to crack a coconut, but my dad, there you go. Whoa. In one hit, he got it. So there you go. And people were asking why are there lemons behind the car. It's because also in Hindu culture, you have to like drive the car over 4 lemons before you officially like drive it. Like it has to go over the lemons. I don't know exactly. I don't know the religious meaning behind it, but yeah, you like have to do it or else like there's bad luck or something. So that's what we got in the context of Tesla. And that is that is officially now in the House, and we got it. All right, cool. So let's talk about tariffs. So why is the market tanking overnight, or why did the market tank last night? Even though we kind of knew the market was going to tank going into Friday night, given Friday afternoon was not the best. Well, ironically, the Wall Street Journal put out an article the same way they put out an article 2 weeks ago about how April 2nd's not going to be that aggressive, and we got to pump right overnight. This time it's the opposite. They're saying actually April 2nd's going to be really bad. And as a result, you can expect some harder volatility. So here's a couple quotes from the article that I think are important for people to get a glimpse of when it comes to how Trump is thinking about tariffs. First quote, in recent days, advisors have considered imposing global tariffs of up to 20% that would hit virtually all U.S. trading partners. Obviously, the market's not going to love that if we have a global trade war with everyone that's trading with the U.S. Second quote, the reciprocal plan is also still on the table, an administration official said, adding that the president is inclined to tariff every country that the U.S. runs a trade deficit with, and that he wants a clean number for each country, though no final decisions have been made. Again, more and more tariffs. And if you have more and more tariffs, that's obviously going to be aggressive when it comes to consumer confidence, price, cost of goods, etc. And then final quote from this article, in addition to the debate over the reciprocal tariff plan, the president's team is considering unveiling a slate of new industry-specific tariffs that could hit critical minerals and products that contain them, among other industries. The other industries obviously will be autos, pharmaceuticals, semiconductors. I mean, all the major goods and services that the United States imports and exports, those likely will start to have more tariffs. A final quote from Trump on NBC on Sunday. He didn't get to do a sit-down interview with him, but he called in and he said a couple things. This quote, I think, was the biggest quote to kind of encapsulate why the market is selling off. Trump says, "I couldn't care less because if the prices on foreign cars go up, they're going to buy American cars," when he was asked about what happens when car prices go up. He then said, "I hope they raise their prices because if they do, people are going to buy American-made cars. We have plenty." I think this quote was the final nail in the coffin for a lot of people that thought that Trump is potentially kidding about tariffs. Now, look, I think there's a world in which he is still kidding about tariffs, but when I mean kidding, I mean more so in the lines of he will implement the tariffs, but then once countries come to an agreement where they get rid of their tariffs, we get rid of our tariffs, and the tariffs go away. I think that's actually a likely possibility on a lot of these countries that just don't want to get into a trade war. However, if he's that serious where he's like, well, if Toyota raises their prices, people will just buy more Teslas, or people will buy more GMs or Fords, etc. I think it is emblematic of how he's thinking about tariffs and why the market is down right now, because the market's like, oh, this guy really doesn't care. Like, he really doesn't care. And again, we will see officially when these tariffs go into effect how much he doesn't care, or is he just propping up his lack of care in order to get the market to take him seriously. But we're going to find that out pretty soon. And the worst part about that quote is that it's not true. Like, GM and Ford, 40% of their parts come across the world. They're imported. So yes, they may make the cars in Detroit or Michigan or Chicago or Texas or California, some of these major manufacturing hubs for manufacturing. But the problem is, if Chicago, Detroit, Texas, California get a lot of their parts, including Tesla, from across the world, those parts get a tariff on them when they're imported. And so when you build the car, you have to raise the prices of an American-made car because there are foreign parts in those cars. And as a result, prices are going to go up for everything. You know, I think the only company that's maybe insulated from that to an extent is Tesla, even though Elon's saying they're not insulated. But Tesla, I think, is in a better position than a lot of the other manufacturers that are getting their goods, which are pretty cheap, from across the world. If those get tariffed, obviously it's going to be aggressive. And so from that perspective, the idea that Americans are just going to buy, American cars, it's like, yeah, but American cars might get more expensive. So that might not be the solution to his problems, which is why my opinion still remains, as ugly as April 2nd is, I do think there is a world in which these get resolved rather quickly, because at the end of the day, the administration just wants to stop paying ridiculous tariffs to India on alcohol. I don't think they necessarily want to impose ridiculous tariffs on India on their alcohol, unless India keeps their tariffs on our alcohol alive. If they get rid of those tariffs, I think we get rid of our reciprocal tariffs. But the question is going to be, like, the number one question is going to be, do those countries actually get rid of our tariffs? And if not, yeah, then we're going to be having some issues. In fact, I think, quite frankly, this is what Trump is planning to do on April 2nd. I found an exclusive clip of 30 seconds that pretty much describes what I think exactly Trump is going to do on April 2nd. So here's this 30-second clip. This is what I think Trump is going to get done on April 2nd.
But what we were saying, Mark, is that front left. Oh, no, there it is. There it is. Two vehicles into cross traffic, a major collision into the front of a paint store at the strip mall at 7th Street and Terminal Avenue.
That's going to be the tariff announcement, and this is what Trump's going to do right after the tariff announcement.
Ramming right through those two vehicles, the driver stepping out of the vehicle and now walking away from the crash.
I'm not going to lie, this looks kind of gangster though, right? Like just fucking run into 7 cars and then just get the hell out and leave. It looked kind of cool the first time I saw it, but I think this is what Trump's going to do.
Right through those two vehicles, the driver stepping out of the vehicle and now walking away from the crash scene. That driver now walking away from the crash scene, 2 major crashes there, and now he's walking up the sidewalk, CHP there.
But like, that's the point, right? It's like he's going to cause a ton of chaos, going to crash into everything, and then he's just going to go right back to the Oval Office like nothing happened. I mean, like, I think that's what we're setting up for in the next couple of days. And based on how that plays out, I guess we're going to see how the market ultimately reacts. Let's listen to Tom Lee. He was on CNBC this morning. Let's try to get some hopium from him and see what happens from there.
In terms of timing, it was about a month early, but in terms of how far the markets actually went down, you're not off by that much. I think the S&P was down about 6%. Now looks like it's be, if it opens where it is right now, it'll be in correction territory again, down 10. But you have the same kind of feeling for this week that some of the underpinnings are in for a real bottom, for a tradable bottom or a real bottom.
Yeah, I mean, both. I mean, if obviously it doesn't feel this way because over the weekend futures came under pressure, but we know markets are really oversold. We know that investors have had a lot of de-risking. And this week, I think into April 2nd, investors have 3 things on their minds. You know, one is they just don't know what the tariffs look like. They don't know if it's going to damage the economy. And I think third, many are just a little terrified of the policies of the White House. But post Wednesday, I think markets are going to have some visibility that allows us to take some of the selling pressure off. So yes, I think it's possible that instead of us breaking down here and seeing markets under further pressure, we're actually got the right pieces
buy
for
though
bottom.
into this without knowing what's on the other side of it? That is the fundamental question that people are sitting around trying to figure out today and tomorrow.
That's right. It's an interminable wait for people because it is still 3 days and they're fearful that we could have 3 days of down 2%. But I kind of agree with Larry Fink. I think the U.S. is going to come out of this okay. I mean, Brexit's an example. You know, Brexit happened and the UK economy emerged okay. It didn't have a huge recession and the stock market did okay. So for investors today, over the weekend, we had so many thinking the economy is going to completely fall off the rails after Wednesday.
Well, people are starting to say slowing growth and persistent inflation. So you put those together and you get the stagflation. Yeah, that's death for.
Yeah, I mean, there's a lot of distortions of the economy now, right? Because we know people are buying cars and wine ahead of tariffs, and that's creating inflation.
Hopefully, they're not doing it the same. You know, cars and the wine.
Do you think it's pushing up our growth numbers that we're seeing at this point between retail sales and other places, or is that too small to distort things on that great of a level?
I think it's possible economists are only dialing in the negative consequences so far, but not the positive, because rates are down and gasoline's down, and there could be some pull forward of demand. So we might end up having better growth, so less stag, and maybe the inflation stuff is more distorting, and so it's not as stagflationary.
You've had some of your recent calls that turned out to be prescient, bullish calls had to do with inflation not being as bad as people feared. Is that still what you're thinking? Because some of the numbers have at least given a head fake that maybe it's still around, and you throw in tariffs. We just heard what Goldman Sachs say, a 0.5 point higher on the PCE than they thought previously, and 3.5 on the PCE is not going to allow the Fed to relax.
I mean, yeah, it's interesting because Goldman did raise their inflation forecast, but then they're talking about more rate cuts.
I know, which is because of growth concerns.
Yes, and I think we'll have a glimpse of what Fed Chair Powell's thinking, because he's speaking Friday after the jobs report. And I do think that it remains a more dovish Fed than many expect. I mean, I think that's what was revealed after the March FOMC meeting. And not that I'm saying it's going to put a reversal of markets here, but I think investors are a little too scared heading into Wednesday.
Bitcoin's testing recent.
Okay, that last 2 minutes we don't have to watch because they asked him about Bitcoin and he says, hey, 150K, I still believe that I'm bullish on Bitcoin. Look, I kind of agree with Tom. So here's kind of my take on how I'm thinking of everything along with seeing sentiment. First of all, no one can predict the bottom. No one knows if there's going to be a bottom or if this is going to be just the beginning of a lot of pain to happen. But we are basically in the pre-markets at all the levels we were at on March 10th, I think. Or March 12th. That's when we officially had that first 10% correction. So the S&P 500 right here, just above 550. We were at 549 at one point. We were at 548 at one point. If we go back a month, there you go, 548.03, March 13th. That was our first, I guess now you can say, local bottom. And then we bounced all the way to 576. We recaptured that 200-day moving average. Everyone was excited, including me. That ended up, I guess we can say, being a dead cat. And now we are right back to that level. So I think the big question today is going to be, can the S&P hold, or do we have a furthering of a decline from what we saw on March 13th? And if we do, how much do we go down before people start feeling like we've bottomed again, if we have bottomed again? I think that's one scenario. The other scenario is, hey, this is not going to stop at 548 or 540 or 545. We're going back to 520, 530, 510, 500 on the S&P 500. And if that's the case, we are like officially entering a full-on bear market. I think that would be a 15 to 17% correction from peak to trough. For the year, it would be basically down 10% year to date. Right now, we're down about 6.2% year to date. So I think there's one of those two scenarios. And when you look at earnings growth, which is kind of what I've been harping on for a while, I don't see the markets revisiting 5,000 on the S&P 500. Could it happen? Sure. But I think earnings are still too strong, having said that we avoid a recession, for us to be able to get to those levels. If you take a look at the S&P 500 right now, we are only up 6.43% over the past year. And again, year to date, we're down basically 6% right now. It says 5%, but if you look at the pre-markets, then it's about 6%. And last year we were up 24% during the year, right? So from a year-over-year comparison, the S&P 500 is rather normal in terms of returns, and individual equities have definitely outperformed it. So the question then becomes, how much more lower do we have to go, and what is the catalyst to go lower? Obviously, the catalyst right now that everyone's looking at is in the context of tariffs, but that begs the question, do you believe that tariffs are going to lead to the types of volatility that gets us into a full-on recession? Here's a couple stats to take a look at to try to answer that question. First of all, Trump now holds the record for the first, second, and fifth fastest 10% drawdowns from a 52-week high in the history of the S&P 500. So from 219 to 311, that was the number 5th fastest drawdown on the S&P 500, 20 days. And typically when you see that, you get a little bit of momentum to the upside. Now, we had that momentum to the upside when we got to 576, but then we came all the way back down to the same levels that we are trading at, or that we were trading at back then, 549. And so we are right back down to that 10% correction even after the rebound. The VIX right now is spiking in the pre-markets as well. We're up 10% on the VIX. You know, typically you sell on that. It's I don't want to say it's selling a bottom, but it's selling where there's a lot more fear than there is more greed. And, you know, you tend to want to sell during greed, not fear. So that could also be an argument for why VIX potentially is signaling that things might not get as bad. Again, all of this gets thrown out the window based on what Trump says. A couple updates from the big banks. Barclays says that April 2nd could bring the biggest wave of U.S. tariffs in history, with Trump likely to hit 15 out of 25 countries. Targets may include China, the EU, India, Canada, and Japan, nations with big trade deficits or high barriers. Tariffs could go up to 50% and take effect immediately. Barclays calls it a legal first and warns markets that flexibility here really just means uncertainty ahead. So whenever Trump says that we're going to be flexible on tariffs, which he had that quote, I think 5 days ago, it was last Monday, and markets actually rallied towards the end of the day. It was at 3:30 that quote came out. By the way, on the market close, when we got new quotes about Trump and pharmaceutical tariffs, and I was like, where is he talking from? Like, where is this press conference happening? It was on Air Force One. He finds a way to get the quotes out there from some place in the world. He was on Air Force One when he was telling reporters that pharmaceutical tariffs are coming as well. But last Monday, when he said, hey, we're going to be flexible, that flexibility, Barclays is just saying, is uncertainty. That's not like something bullish to assume that Trump's going to get rid of tariffs or going to take them down a notch. It just means we have to be a little bit more skeptical about how uncertain that we can get. Then we have Goldman Sachs. So Goldman Sachs cut their S&P 500 return forecast to -5% over the next 3 months and +6% over the next 12 months, down from prior estimates of 0% and 16%. So you got a big downgrade essentially on the S&P 500. It also lowered their 2025 EPS growth to 3% from 7%. So that's down about 4%, with fiscal year earnings now seen at 253, well below Wall Street consensus, which is around that 260, 270 level. Right now, the 10-year, by the way, has come down based on some of this tariff volatility. We're at 4.209. We were at 4.35 last week, so it's nice to see us back to 4.2. We were at 4.18 last night, but we're going to see this come down a bit more. What Goldman says on the S&P 500 is that higher tariffs, weaker economic growth, and greater inflation than we previously assumed led us to cut our S&P 500 EPS growth forecast to 3% in 2025. Our new EPS estimates are 253 and 269. These estimates are below and both the top-down strategist consensus and the bottom-up consensus of equity analysis. Now, you might be asking, well, why is Goldman Sachs meaningfully decreasing their S&P 500 targets? Well, it's because they raised the probability that a recession occurs in the next 12 months from 20% to 35%. Here is their analysis. For the second time in less than a month, we are raising our tariff assumptions. We now expect the average U.S. tariff to rise 15 bips in 2025, our previous risk case, and 5 bips more than our previous baseline. Almost the entire revision reflects a more aggressive assumption of reciprocal tariffs. We expect President Trump to announce reciprocal tariffs that average 15% across all U.S. trading partners on April 2nd, although we expect product and country exclusions to ultimately whittle the addition to the average U.S. tariff right down to 9. Higher tariffs are likely to boost consumer prices, and we have lifted our year-end 2025 core PCE inflation forecast by 0.5 to 3.5% year over year, reflecting both the tariff news and a decline in our Q1 GDP tracking estimate to just 0.2%, aka more inflation, less growth. We have also lowered our 2025 GDP growth forecast by 0.5% to 1% on a quarter-over-quarter annual basis, down from 1.5%. Finally, they say we now see a 12-month recession probability of 35%. The upgrade from our previous 20% estimate reflects our lower growth baseline. That's GDP growth coming down. The Atlanta Fed did have a read of negative 2.8% for Q4, which would be, about a 3% decline in growth. The sharp recent deterioration in household and business confidence and statements from the White House officials indicating greater willingness to tolerate near-term economic weakness, aka a detox, in pursuit of their policies. While sentiment has been a poor predictor of activity over the last few years, we are less dismissive of the recent decline because economic fundamentals are not as strong as in prior years. Most importantly, real income growth has already slowed sharply, and we expect it to average only 1.4% this year. We know that personal savings growth has actually gone up. So you've got real wage growth slightly up, personal savings growth up a ton. That means consumers are bringing in less money from their jobs, but they're saving more money, which means they're not going to be spending that money in the economy, aka you might have a potential loss of earnings growth, which is why it kind of makes sense that Goldman Sachs is lowering their forecast. Again, I think the broader question here is, do you believe that earnings growth actually will fall off as aggressively as some of these banks are saying it will? And if you do, then yeah, you sell. But the problem is, right, and I think this is what everyone's dealing with right now when it comes to selling. It's like, do you really sell Nvda at 105? Do you really get out of it? I mean, like, do you really sell the market? Do you sell Google at 154? Is Google going to 130? Is it going to trade at 10 times next year's earnings? I mean, these are the questions that I think a lot of people are asking. And it's still a stock picker's market. I could understand people saying, hey, yeah, we sell off Tesla at 248. I mean, Tesla went from 215 to 291, now at 248. This is insane. But it's also like, this is Tesla. This is the nature of the volatility of Tesla. So for the people that feel like they missed the run when it went to 291, I mean, now it's at 248. Do you actually buy that dip, or do you kind of get scared that this thing's going lower? We have April 2nd delivery numbers coming out for Tesla soon. We're going to see how those play out. But this is the level of volatility that exists. Same thing with Palantir, down about 6.65%, just holding above 80. Yes, I understand Palantir is an expensive stock right here, but do you sell it at 80 after it was just at 98 on Friday, or do you feel like you're selling the bottom? And so these are questions that I think don't really have an answer to. Robinhood down another 5% in the pre-markets, below $40. Lululemon down another 2% after being down 15%. The Qs are down another 1% after losing 3% on Friday. I mean, these are just those questions around if selling here is actually the solution to stock up on cash, because we're entering into a 2022 type year. And the funny thing about this is, I think every analyst has also said this, if we get rid of the tariff volatility, what exactly is the macro super bear thesis that exists? Because right now, it feels very tariff oriented. And yes, there's other little things you can nitpick. I know people are looking at the housing market, all that stuff, but I think the majority of the sell-off that we're seeing right now is based on uncertainties around tariffs. And if those uncertainties become certainties, aka we make some deals, I think a lot of this goes away. But the question is if that ends up playing out. Gatekeeper says never sell when the VIX is this high. I mean, yeah, that's a good, I mean, it's a rule of thumb, right? Like when the VIX gets this high, it means there's a lot of volatility and peak fear that's happening in the market right now because volatility is spiking the way it is. And it just begs the question, if this is 2022, then yeah, theoretically, I guess selling in March, given we bottomed in December of 2022, you're going to save a little bit of money. But the real sell was in early February or at least late January. I don't think it's necessarily right now because, yeah, we're probably going to go down a little bit lower, but are we going to go that much down lower where the opportunity cost of holding on to cash was better than trying to have the mental stability to time it, which obviously is hard for most people to do. Amid the big macro bear thesis that most stock valuations are priced to perfection and this is unsustainable, correction is needed. I don't agree with you that a correction was not needed. I definitely think we needed to, again, get some of the froth out of the market. Fartcoin going to $1 billion market cap. That's, stuff like that mattered. Someone had a great tweet last night, actually. They said when the paid Discord subscriptions started to, like, every other day, a new person on Twitter was like, hey, join my Discord for the buy sell alerts. That was a top. I was like, that is a great top indicator. When people open up a paid Discord promising to tell you exactly when to buy and sell for $10 a month or worse, I've seen some of these guys charge like $500 a month, some ridiculous numbers. Like, yeah, that's probably a top signal because everyone feels like they can pick stocks. But when the Discords start going bankrupt, that's more of a bottom signal. And right now, you're not seeing that many new Discords get opened up because people are scared. So look, I agree that there was a bit of a correction that was needed, but I don't agree that like Google is some unsustainable valuation. And there's a lot of flexibility, I think, a margin of safety for Google to not have the best earnings and still be deeply undervalued, just given where the valuation is compressed to. So for some stocks like Tesla and Palantir, yeah, they have to have a really good earnings because if they don't, their valuations are obviously aggressive. For Nvda and Google, I mean, they could have an earnings that maybe is not absolutely A+ perfect. Maybe it's a B+, A-, and I still think they would be competitively priced against their current valuations. I think the broader question here is, do you think if Google's trading at 15 times earnings, do you think next year Google will put up the growth that makes 15 times earnings looks cheap? Or with Nvidia trading at 25 times earnings? Well, if Nvidia fundamentally does not meet its growth estimates next year, then 25 times earnings will become 35 times earnings, right? So like if you believe in the long-term trajectory of these two companies going into 2026, if we avoid a recession, do they still look cheap? And I think that's the question to determine if DCAing right here kind of makes sense. Someone says today equals August 5th. I don't know. Is today an August 5th type of day? That's an interesting question. That is an interesting question. Okay. So having said that, let's actually bring up this concept of Japan. So the Nikkei, end of the day, down 4% yesterday. A lot of people were saying the yen carry trade is continuing to get unwind. I would disagree with that. If you look at the short float on the yen, it is nowhere near the levels of where it was in August, right? People, from my understanding, are not meaningfully shorting the yen to then use that capital to then buy Nvidia. And then, the reason they're selling off Nvidia is because they have to cover their short on the yen. I mean, like, first of all, logically, that doesn't make sense because all the tech stocks are shit. So if people are shorting the yen like they did in August to buy tech, they're definitely not buying tech with the capital they're getting from shorting the yen. They're buying something else. And I don't think people are going to take a risk on shorting Japan to buy consumer staples. So from that, like just logical perspective, I don't think the yen is as heavily shorted. Also, the data shows us the yen is not that heavily shorted. I think Japan is going from a stage where they're welcoming inflation. Remember, Japan has been negative inflation for a very long time. And this is why they've started to finally raise rates. And so as a result of them starting to raise rates, I think the broader economy is trying to adjust, and the market's trying to adjust with how they should value Japanese stocks. Again, I have to do a lot more research into Japan because I don't have a solid thesis for why they were down 4% yesterday. I don't think it's the yen carry trade stuff. I think that's too simple of an explanation. I think there's something else going on. Is it something super deep that could cause something global? Maybe, maybe not. I mean, I really haven't done the research, but I think it probably has to do with them raising their rates for the first consecutive times in 30 years. Last time they raised was end of January. And so I think that's kind of what's playing out in the context of Japan. How is everybody feeling? How would you guys describe what you're feeling right now? Because to me, I mean, look, I like genuinely, and maybe you guys can tell from my voice, I feel a bit desensitized to this. We've gone through this for the past couple of months. This is the nature of the Trump economy, kind of accepted it the way it is. And I feel like at some point you just have to roll with the punches and see what plays out. I also think, maybe naively, we are closer to the bottom than not, simply because I think April 2nd, if it's not getting somewhat priced in today, then I guess the market's just being cruel, going down 2% in the pre-markets. I think there is some level of, all right, April 2nd is going to suck. Let's price it in right now before it happens. Then it happens. Maybe it sucks more and the market goes down more, but maybe it's like, all right, we knew it was going to suck. It sucked. This is what we have to deal with. And now we restart pricing equities potentially to the upside as we move on from all that pain. Granted, the extent of the damage, I think, is going to really determine how bad things get on April 2nd and how much more stocks can continuously go on. Uzi says, I'm trying to figure out if I buy more or just wait. I think this is another reason money's not flowing into the markets, right? Do you really buy? I don't think anyone's super, even like, I think Hood at 39 is cheap. Am I super excited to buy Hood right now? Not really, because if Bitcoin tanks and the market tanks, I mean, that's not good for Hood. So it's like all these things are you really excited to buy Tesla 248? Well, if April 2nd deliveries come in really bad, I mean, and I think that's another reason the next couple of days are going to be a little tricky, because everyone's waiting for this doomsday to happen April 2nd and then to move on. And maybe this is the time to buy because it's a doomsday that will be priced in eventually once it happens. But it's definitely a bit scary. And I can understand why people are a bit scared. Mickey says, I miss Biden. Yeah, I saw a lot of tweets about that last night. It was like, look, the guy didn't say anything, but at least he didn't say anything. So it was one of those things where Trump is saying something every single day and Biden said nothing. But this is the world we live in. This is the world we live in. Some people are saying I'm waiting to buy the dip. Some people are saying I'm collecting cash to buy the dip. Siren says dollar cost averaging, but still nervous. You don't know when to reach a positive level again. That is fair. Are you buying the dip amid? I feel like I've been buying the dip all year. Like, I feel like I bought Nvidia at 115. Like, I feel like, I bought Hood at like 41. I've definitely been a dip buyer, I would say. It's just one of those things where at some point you have to figure out when this stops or when this gets a little bit of momentum to the upside. And the sad thing is, and this is the tough part about navigating markets. It's why you don't pay for those paid Discord alerts, is because I doubt very many of them could have told you exactly to buy at 548 on March 13th and then exactly to sell at 576 on March 26th. And for any Discord that did that, congrats. But I would say the majority of them are just clueless like everyone else, and they're trying to figure out what's happening. So it's tough, right? And again, on 576, there was not only quantitative reasons to get bullish, but also qualitative reasons in terms of a lot of the narratives around tariffs kind of slowing down and stuff not getting as aggressive. But then Trump ramped it up on Friday afternoon with 3 different press conferences, one of them being on a freaking airplane after hours, where we got even more headlines about tariffs. Like on the market close on Friday, we dropped another 0.5%. And I was just like, where are these headlines coming from? It was from Air Force One, where he was saying more stuff. And then over the weekend, the Wall Street Journal put out this piece that really got the markets to be afraid. And so here we are. And now we just have to kind of figure out how we navigate it. In the context of Bitcoin, so 2 things on Bitcoin. Number one, Saylor bought another $2 billion worth of Bitcoin today. 86,969 was his average. He bought 22,000 more Bitcoin. Currently, the company has 528,000 Bitcoin acquired for $35 billion at an average of 67,458. So Saylor continued to buy the dip. However, Bitcoin is well below where he bought it at. It's at 82 right now. He bought it at 86. And the reason for that is this chart right here. This is the Bitcoin futures all over the NASDAQ futures. And as you can see, there's almost a 1-to-1 correlation between the Bitcoin futures and NASDAQ futures. And the reason for this, and I think this analysis here makes a lot of sense, is that the last few months have shown that as traditional investors have entered the space, the correlation to traditional macro assets has also gone up. Bonds, mutual funds, etc. And therefore, logically, Bitcoin, even if it is outperforming other crypto assets, is mostly trading with the global risk sentiment as proxied with the S&P 500 and NASDAQ futures. So like as more investors get into something like money market funds, which are different instruments that they can use to potentially protect against the risk and like literally take on no risk, right? Go risk off. You have risk on assets like the NASDAQ and Bitcoin continuing to trade in the same channel, and they trade with each other. So Bitcoin going up right here, 1.1%, that is kind of encouraging going into the market open. Maybe the NASDAQ follows, but realistically, I don't think Bitcoin is a safe haven. What is the safe haven, which is very scary, quite frankly. I mean, this is one thing I will definitely say freaks me out a little bit, is gold. Gold is up again. At one point it crossed 3150. Right now it's at 3120. And I mean, when you get to these levels on gold, it means that the world is preparing, or at least they're signaling that they're preparing for pain. Now I hear a lot of people also saying this is the time to short gold because people are getting way too bearish, and like this is the time where you would initiate a short, and like gold is being used as a hedge against something that doesn't need to be hedged, aka the tariff volatility won't be that bad. Maybe that thesis is correct. If that thesis is not correct and things actually hit the fan, then yeah, gold going higher is definitely a little concerning for how the broader markets are going to be reacting to some of the pain that we have right now. So if you're in gold or you've been in gold, you've been kind of safe, at least in that sector for the past couple of weeks. But digital gold has not necessarily been the safe right now. I mean, when do you think Nvidia starts massive buybacks? I think they've already started it. They've allocated what, 50 billion to buybacks. I'm pretty sure they bought back much higher than 104. Like I don't think Nvidia is waiting for like some below 100 type of strike to start buying. I'm pretty sure they've already initiated a ton of buybacks. Quite frankly, I don't even know if they want to initiate that much more as we end out the quarter. But I don't think buybacks are going to save Nvidia, dude. Nvidia is a question of the market genuinely not believing the AI CapEx cycle and how it's playing out. In fact, I mean, look, there's a lot of mixed opinions and mixed reviews on how you think of AI. We did have some indication from Sam Altman that Nvidia feels a bit undervalued. So this whole image trend on OpenAI, where you can say, hey, make this image in this sort of animation that's been going crazy viral if you've been on Twitter, like it's completely frying the OpenAI GPUs because like a lot of people are using this image trend. And what he said on Twitter yesterday was, can you guys please chill on generating images? This is insane. Our team needs sleep. Someone responded, this is not the flex you think it is. Raising at a $300 billion valuation with a flawed business model that isn't profitable. This is the real reason you guys should be losing sleep. And Sam Altman says, as a business, we are doing really great, but thanks for your concern. Now, granted, that's what any CEO should say to that. But one thing that Altman is correct about, and if you take a look at this chart, I was pretty amazed by this. ChatGPT has crossed Google in search terms on Google.com. You might be thinking, why do people go to Google and type in Google? It's because I don't know why people go to Google and type in Google because they're already on Google, but it's probably a habit for people that they've had for years. But ChatGPT has crossed Google on Google in search term volumes. And if you look at Grok, it's not that far behind either. I mean, it's farther than ChatGPT and Google, but it's up there. So when we talk about, when he says, hey, as a business, we're doing fine, you can either, you can come up with your, LLMs are commoditized, blah, 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 and you can get into that whole bear thesis. But in terms of search traffic, I mean, this is becoming one of the most popular websites on the planet. And if it overtakes Google, which I think it's still far away from overtaking Google, Google gets 88 billion visits per month. I think ChatGPT is still closing in on like 3 billion. But if it even gets anywhere close to that, this is one of those businesses where maybe the sheer volume of distribution they have, because they were the first movers and, these image trends, et cetera, are going viral and they're able to come up with more of these trends. Maybe that is what carries OpenAI to the finish line, even if it's a commoditized product. Maybe the commodity, they just have the best version of that commodity. And that's why they're worth $300 billion right now. So what does that mean for NVIDIA? Well, I mean, if there's that much usage on an image trend that has gone viral on OpenAI, where do we think the future is going when it comes to AI? And what I mean by that is, this is the image right here. It's forgetting the name of it. It's like Gilbily or something. That's the name of this trend. It's some artist that OpenAI is allowing you to make your images in. It's not, it's just this animated trend thing, right? Like people like their photos being animated. I mean, let me show you. Tanner posted a picture of me in this trend as well. And it's like gone viral. And so this was us at dinner at the Robinhood event. Me, Tanner, Roy, and Wolf Financial. So all of us are there, right? And it's this trend. And my point right here, Roy looks the best out of this, dude. They got Roy perfectly. But the point is, if this trend is frying their GPUs, what happens in the future when you have real use cases? And I know there's real use cases right now, but let's assume there's like 10x the number of use cases because AI becomes that good. What happens to NVIDIA's demand when it's that expansive? And I think this image trend is kind of emblematic of the fact that like this is not going anywhere. NVIDIA's GPUs are needed more than ever, especially the newest versions of them. And NVIDIA's releasing one every single year. I just think market sentiment is so disgusting on NVIDIA and the broader CapEx trade right now that it's creating a ton of pain for the stock. This was the before and the after. So this is the before pick, which is kind of blurry, right? The fact that it even picked it up that well is incredible. And this is the after. It even got the edamame there, bro. Like it was a hell of a trend. But it's because OpenAI had some really good engineering to make these pictures turn out the way they turned out. So it got me terrible. Correct. It got me terrible. So my point is just like I think this is going to be an expansive journey over the next decade. I mean, like we can go into robots and self-driving, but if an image trend is frying their GPUs, by the way, what happens when Grok and Gemini introduce those image trends as well? And all the other LLMs copy OpenAI here, but you've got tons and tons of different users being able to access these image trend, or you know, today it's an image trend, tomorrow it might be a video trend. I mean, what happens when you can put yourself into a video and say, hey, ChatGPT, use this video template, make this into a video, and then you can share that video with your friends. Like this is only going to get bigger and bigger and bigger, in my opinion. And we're going to need a lot of GPUs to architect that. I think DeepSeek's $6 million inference training on NVIDIA's GPUs is not the bear case for what's going to happen with compute. And that's only for LLMs. When we take it again to its most sophisticated level with robots and physical manifestations of AI, I think it gets deeper. So from that perspective, yes, I think NVIDIA is a buy, but is the narrative hit on NVIDIA? Absolutely. And that narrative is not going to get better until they continue to put up the numbers. It's not like they haven't put up the numbers. The market just wants to see them keep putting up the numbers before they give them a premium. But we've seen NVIDIA go from 120 to 105 right back to 120 within the spawn of, 10 days? So maybe that happens again, but eventually after April 2nd, we're going to have to see where this tariff volatility ultimately goes. All right, here we go. Another day in the markets. Happy Monday to everybody. It is the last day of quarter one, Monday, March 31st, 9:30 a.m. Thank everybody for being here. The stock market is now open. All right, wake your ass up. Let's see how much money we're going to lose today, or if we maybe stop losing some money. NVIDIA down 4% as the broader market opens, 105.23. Palantir down 5.9%. We were at 79.42 in the pre-markets. Right now we're at $80. So kind of holding the pre-market lows. We'll see how that ends up in a little bit. But Palantir right here is at $80.69. Tesla down 5.32%, 249.72 on Tesla. Got a couple green candles right there from those pre-market lows. NVIDIA 105.63, Novo Nordisk 67.68. This stock is down 50% year over year and has lost $300 billion in market cap. Eli Lilly 803, that's down about 2.3%. MicroStrategy is down 2.4%. GameStop's down 2%. Google's down 1%. Bitcoin 82.3, that's green. Bitcoin going green while the NASDAQ is red. Kind of feels like there's going to be a reversal in the NASDAQ. I mean, you would think Bitcoin would be falling with it, but that's not happening yet. Robinhood 39.82. So that's not revisiting the 38.80 lows in the pre-market, trying to get its way back up to 40. Even silver's red, which is also another indication that we might get a reversal. Silver should be green right now, given some of this volatility, but that's not the case. SoFi, that's down 3.7%. PayPal's down 1%. Rocket Lab down 3.8%. Rocket Lab was at $20 on Friday after winning that newest contract, but they are now down to $17.92. Grab getting hit again, down 5%. I truly think this is algorithmic. I do not think there's anything fundamental to get Grab back to these levels. But if the market as a whole continues to fall, then Grab is going to fall with it. Netflix right here down about 2%. Uber is down 1.32%. Affirm's down 3.4%. GM and Ford down another 1.6%. Hims down 3.6%. Nubank down 3%. American Express down 1%. JP Morgan down 2%. All the financials are getting hit right here. Palantir just holding on to that $80 level. That's green. Is Celsius green? There's no way. Celsius is freaking up 4%. Of course. This freaking stock, bro. I wish I bought the stock at 25 just so I could enjoy the hedge that is Celsius. I mean, Celsius is a better hedge than gold at this point, dude. This is just insanity. Celsius right here, 35.17. That is green. It's not even green. It's just pumping. Oh, they did get upgraded. I forgot. JP Morgan put them to 45 from 35. I saw that this morning. Well, I mean, but on a red day, S&P down 1%, to still go up 4% because of an upgrade, like an upgrade on a really bad macro red day shouldn't mean much, but I guess it does in the context of Celsius. So there you go. Celsius up 4%, the S&P 500 down 1.13%. Maybe people are thinking that people are going to have to drink energy drinks to get their energy because of how bad the economy is. I mean, is that the Celsius thesis? By the way, speaking of how bad the economy is, or how bad the perceived economy is, Google searches for how to reduce stress just hit a record high. This is from CNBC. Google searches for how to reduce stress just hit a record high. So you do have people trying to figure out how to deal with the stress of life, maybe when it comes to the economy, investing, or anything else, but that might be a bit of an indicator right here. Palantir down 6.3%, Tesla 244. So 249 was not able to be held on to. 244.63, that's down about 7.2%. A lot of the call options that were bought, I think someone spent $50 million on buying the $840 call for June 2027. That was some of the option flow I saw last week. Yeah, a lot of that just got burned in the past 2 weeks. Because as Tesla was going up to 291, those calls were increasing in value. Right back down to 245, those calls are getting hit. So a lot of the option flow that has been relatively bullish for Tesla in terms of people buying long out of the calls or out of the money calls, those are getting hit. Nvda below 105, 104. What is the absolute low this year on Nvda? The absolute low year to date on Nvda was 104.76. Oh, wow. We just went below that. We just went below the 52-week low on Nvidia. 104.76. We're now at 104.42. So we have hit a new low for the year for Nvidia. Meta as well. I think this is a new low for the year. This is a new low for 555. Yeah, new low for the year. There you go. Yep, 554.99. That is a new low for the year. The previous low was 572. That is a new low for Meta. Even during DeepSeek, Meta was at 602. So it is well below where it was on DeepSeek. Sorry, yeah, not a 52-week low, a 2025 low. 52-week low would include 2024, but a 2025 low on Nvidia, we have hit a new low, 104.3. Google, 153, that's down 1.5. Let's look at the rest of the Max 7. Where's Apple? Where's Apple today? Apple, 217. Apple's actually holding up, bro. Barely down. Freaking Apple, dude. Barely down, 217, down 1/3%. Microsoft's down 3, Meta's down 4, Google's down 2. Amazon 185, baby. That's a new 2025 low for Amazon. And then Tessie down 7%, Nvidia down 4.5%. The semis, I'm afraid to look at the semis. Are they red? Well, they're not green. Nvidia down 4%, AMD down 3%, SMCI down 3%. SMCI is about to hit the 20s if it keeps going. Intel down 2%, Broadcom down 4%, ASML down 3%, TSM down 2%, Qualcomm down 2%, Dell now below 90, Micron right back to 85 where it was at earnings couple of days ago. Google is up 2% since the end of 2021. Yeah, we looked at this stat on Friday. At the time, Google was up 4% since 2021, even though they've increased revenues by 36% and EPS by about 50%. I mean, it's cheap. There's nothing else to say, but the cheap can get cheaper. And I think if the narrative is LLMs are going to hurt Google, I mean, I just don't buy it. 2.5, I used it over the weekend. Gemini, I finally got to play with it a little bit. Pretty amazing. I don't think ChatGPT is the death of Google, but I do think the street has heavily rotated out of the Max 7 this year. And it seems like they may continue to do that until they get clarity on tariffs. CoreWeave, yeah, that's down 6%. Okay, so that stock closed basically even on Friday when they debuted. They opened at 40, they closed at 40. They are now at 37.37. If this thing does not fall by 20%, I would consider it the IPO a success. because it has every single red flag you could imagine. And even if you could overlook those red flags, just the sentiment of this macro to be going public as a semiconductor company, I mean, with 10 billion in debt, like, come on, bro, this is not the time to IPO. But then again, there probably wasn't a better time than now to IPO. So they kind of had to do it. But if they don't fall 20% over the coming weeks, I would say that's a success, because this thing, Kathy Wood bought 400,000 shares. She's propping it up. Nvda bought 250 million of that, and Nvda already owns 6% of it, so they're propping it up. And the CEO said on Yahoo Finance the other day that if Nvda did not anchor the IPO, they couldn't have got the IPO done. So like, you really needed some of the big players to buy stock. And I think that's the only reason this one is holding up the way it is right now. S&P 500, wow, 1.2% down. We have not hit the 2025 low, which is 548.03. We're at 548.96. So we're about, what is it? Essentially 80 cents away from getting there. But we have not hit the 2025 low on that yet. What are the chances that tariffs are not going to happen on April 2nd? I would say 0. The tariffs are definitely going to happen. The question is, to what extent are they going to happen? And based on all the quotes Trump gave over the weekend, he is, again, I don't know if he's lying about this, because he has lied in the past about tariffs, but he seems pretty damn adamant that the tariffs are going to be reciprocal, and that they're not going away until other countries get rid of their tariffs. I mean, the best case scenario would be, let's say we tariff, I don't know, let's just use India as an example. We tariff India 50% because they tariff us 50%. Let's just say across all goods. Let's say in a month, so like May, June, India's like, you know what, this kind of sucks. We really don't like having reciprocal tariffs. We're going to lower our 50% tariffs to 10%. What's going to happen? Well, the United States theoretically would lower our 50% to 10%, and we would have a much more neutral environment where the negotiations, or you could call it tough love by Trump on tariffs, it worked. How likely is that to happen, I think, is the question. And how much pain do investors have to go through, which is, I think, every time Trump references the pain, I think that's what he's talking about. I think he's talking about the time in which it'll take before all these other countries realize that they don't actually want a trade war with the United States, and they capitulate before we capitulate, because at some point, someone's going to capitulate. And in the meantime, investors get to feel the beautiful pain from India waiting to decrease their tariffs, or from the EU, waiting to decrease their tariffs. But I feel like that's how it's going to play out. I feel like the tariffs are going to go into effect, and then it's going to take some time until one side finally says, all right, enough is enough. Nvidia, 104.26. We have not hit 103 yet on Nvidia, but it looks like she wants to get there. It looks like she wants to get there. 30 cents away from at this point, bro, just take it below 100. Just take it below 100. It feels like that's where she wants to go. Oh man. We are in extreme fear again. That is correct. We got extreme fear on the fear and greed. Amit, we're not only feeling this pain as shareholders, we feel it as consumers as well. Yeah, I mean, I think that's going to be another big question, right? How much do prices go up when cost of goods go up? So Peter Navarro, one of Trump's advisors, he went on NBC over Friday, and he said tariffs are going to bring in $600 billion of revenue, and over the next 10 years, they're going to bring in $6 trillion of revenue, which is fine and dandy to say that. The problem is, the government is going to collect less tax revenue in terms of sales tax, because people aren't going to be buying that much, because if we really do bring in $600 billion of revenue, that means prices will have to go up on goods and services. Like the idea that, your haircut or your laptop is not going to cost a little bit more after you have a 25% tariff is like asinine. Like, yeah, we're probably going to be spending less as consumers because we don't want to buy things that are that expensive. So there's going to be less overall tax revenue. And then B, the question is going to be, do we bring more manufacturing to the United States? And if we bring more manufacturing to the United States, does that also increase the cost of goods, which decreases the ability for consumers to, again, spend? And does that also bring in all the manufacturing jobs that would bring in the juicy tax revenues the Trump administration is looking for, from bringing all these jobs from offshore into the United States? Nvidia right there below 104. There she is, 103.9 on Nvidia. And so I think that's the broader question, right? It's like, all right, even if we bring in this $600 billion number, which that was also, if you look at some of the numbers, I don't know where the hell they're getting $600 billion a year, unless they really impose 50% tariffs across every country. we're not getting. I mean, the China tariffs brought in $70 billion from 2018, and that was over the course of 5 years. So where the hell does he think we're going to get $600 billion from per year? Like, I don't know how aggressive they're planning to be with these tariffs here. But even if you assume that's the case, the cost of living should go higher, which should decrease overall tax revenue collected by the government. Now, granted, if the government's cutting a lot of spending with Doge, you can decrease your tax revenue and get it from the tariffs because we're not spending as much. But the question is, are we actually going to make a dent in terms of how much we're spending? Nvidia right here, 103.93. The S&P 500, there you go. A new, not 52-week low, but 2025 yearly low for the S&P 500, 547.73. 547.73. It is a new 2025 low for the S&P 500. Winning. We need a button on the soundboard with Trump saying winning. That's what we need. Just every time we hit a new low, we need to press that button. So much winning. So much winning. Okay, where's the 10-year? Where's the 10-year? Is the 10-year at least down? If the 10-year is not down, we've got some issues. Okay, the 10-year is barely down, bro. Like, if we're going to crank the stock market, at least get this 10-year to come down. We're not down enough, bro. 4.2. That's not enough. We need that sucker at 3.8. We need to get this 10-year to come down. Anyway, who's buying the dip? Are we buying the dip? I know no one wants to hear that right now. I haven't even checked my portfolio. Let's open it up today. Oh, wow. That's red. That's like that's a different color red. For some reason, this red looks more red today. Holy crap. This is a red day. All right, folks, we are down $42,977.29. For some reason, that red just looks a little bit more red than usual. Yeah, that's down. We are down. We are definitely down on the day. Let's see. I don't want to buy the dip yet. Let's see kind of how the day plays out. Let's see how this ends up turning. I mean, look, is Nvidia going below 100? Maybe. Do I think it happens today? Kind of don't. So let's see a little bit. Let's see where the market plays out. I feel like we're going to get some new headlines today. Look at SoFi, about to go under 11. Robinhood, there you go, under 39. Pepsi and Coca-Cola are green. Is Berkshire green today? Berkshire is only down 1%, which is better than the rest of the market. But I don't know. This is the hard part about buying the dip. You got to deal with the fact that the dip may continue dipping in a lot of different sectors. Reddit's under 100. Wow. Reddit. Well, this one was kind of expected to be under 100, but this was at 250 or 230 at one point. Chicago PMI at 945. Well, it is literally 945. That is perfect. Okay. Let's get Chicago PMI. Let's see what these numbers look like. The market wants 45.2. This could be potentially a market mover. Let's see what we come in at. 45.2. Shopify under 90. Wow. Shopify is getting hit. That's correct. Amit, are you keeping all your options? Yes, I have all my options. I have all my grab options, hood options. Have not gotten rid of any of those. Have my Google calls as well. 45.2. Chris is asking for the StreamYard link. Isn't Chris supposed to be in Mexico? Is Chris in the chat? Chris is supposed to be not looking at the portfolio right now. Chris is supposed to be chilling. Okay, where's the number? Hold on. Let me refresh. Maybe I have to refresh. 45.2 is what the market wanted. Hasn't come out yet. Did we get it? No, it's still not out yet. Okay, it's a minute late. We should be getting it in a second. Let's see how the market reacts to this. Yeah, I don't think he was in the chat. I think you guys were trolling. He's definitely, I hope he's taking some time off. His wife is going to kill him if he's looking at his portfolio, bro. Dutch Bro's down 6%. Goodness gracious. Yeah, let me put up the heat map, see where we are. Okay, I don't know why those numbers are taking too long. I'll get to them when they come up, but they are not here yet. Where's the heat map? Wow, look at that. Oh my, look at that. Chris says he's on the beach. All right, Chris, don't look at the portfolio. Hopefully you're enjoying the beach. Dude, where's this PMI number? Why is it late? I feel like they don't want to tell it to us because they know it's going to be bad. Oh my gosh. It usually comes out immediately. It's 2 minutes late. That's weird. All right, I guess we have to wait for PMI. Oh, 47.6? Okay, TradingView was not showing it. Okay, that's good. That's above expected. That's good. That's not horrible. 47.6. Did we get any bounce on that at all? We got a very small, wow, yeah, we did. We bounced from 546, holy crap, up to 547.5. Look at that tiny bounce on PMI. Thank goodness that wasn't a miss on PMI. So it means we are more expanding than contracting when it comes to manufacturing. So it exceeded market expectations. We're up 6 points, the highest since November 2023 on new orders, which is good. That means more imports and more manufacturing. Supplier deliveries was up 9 points. Order backlogs was up 5 points. And then production was up 7.6 points, the highest since June of 2024. It's a good read. It's a good read. Not a horrible read at all. If we had a nasty read on PMI, then I think we would see an even lower S&P 500 right now. That's a decent read. It doesn't mean it's going to save us, but it does mean it might not hurt us as much anymore. S&P 500 down 1.6%. The Q's down 2%. So tech really taking it on the chin. Nvda trying to hold 104, but really can't. CoreWeave down another 2% from when we talked about it in the morning. That was from 38 to 36. So that one continues to get hit. Reddit down 8%. S&P again down 1.5. Meta down 3. And then Tesla 245. That's down about 6.7%. Yeah, there's the PMI numbers right there. Also this week, JPOW speaks. JPOW speaks on Friday after we get the jobs data. So look, it's going to be a question of like, hey, do we finally get JPOW to feel that it's time to take a stab at these rates? And I don't think that's necessarily going to happen. Here's what Elon Musk had to say about the Fed yesterday in Wisconsin.
On behalf of America, for the idiots you have to deal with, for what you're doing for us to improve our country. Second of all, my question is, what is your opinion on the Federal Reserve, and do you have any intentions of doing anything with them?
And the Fed. Yeah, I don't know. I always wanted to say that, you know. But I mean, I think there's like 20,000 people that work at the Fed. Seems pretty high. It's like there's a lot of people that work at the Fed, and it seems like, why do we have so many people at the Fed, and what do they do? And you know, sometimes I wonder which one would win. You know, the federal for interest rates, the board of the Federal Reserve, or a magic 8-ball. And I'm like, I think the magic 8-ball might win. You know. So then I'm like, well, magic 8-ball is a lot cheaper. So, you know, it's like you shake it, it says, check back again later. I'm like, okay. Same thing. But I think what really matters is that government spending is not far in excess of government revenue. That's a fundamental issue that we have, where we have a deficit of $2 trillion. And we have interest payments that now exceed the entire budget of the military. In fact, that was a big wake-up call for me, was when the amount of money that we pay in national debt interest exceeded the Defense Department budget. I'm like, the Defense Department budget is very big, and interest is higher than that, and climbing. That's a disaster. You know, so the very simple, straightforward goal of the Doge team is to get rid of waste and fraud. It's mostly waste. It's or depending on how, you know, I'd say it's probably 80% waste, 20% fraud, something like that.
So, I mean, look, Elon's argument has been kind of consistent on this as well, is that the Fed has been wrong when it comes to interest rates. Now, granted, it's not an original opinion. Pretty much everyone thinks the Fed is wrong when it comes to interest rates. I feel like I'm one of the people that gives Jay Powell some credit. I mean, he did inherit an economy with what 10 trillion printed in like 10 months when it came to COVID. And so obviously you've got to flesh out a lot of that leverage. It's not easy to manage it. Yes, did they miss inflation in 2021? That's correct. They definitely missed that, but the recovery has not been horrible. However, I do think there is a world where if tariffs go into effect and they're that dramatic in terms of the allocation of tariffs across the entire country, and inflation is still at 2.8, 2.7%, I do think there's a world where Jay Powell has to step up and be like, hey, growth is going to slow down. I need to cut rates. And because growth is going to slow down, you don't need to worry about inflation because inflation will slow down with growth slows down. But you do need to stimulate before shit hits the fan and we enter into something much worse. So I don't know. Maybe Trump's playing this game where he's like kind of forcing Jay Powell's hand right here with a lot of this volatility. But if we do have wide sweeping tariffs and no rate cuts, I think things can get ugly. I mean, the only bright side will be inflation will come down because growth will slow down. But yeah, at what cost does inflation come down at that point, right? The reason Jay Powell always got so much credit for 2024 is because inflation came down. We got to a low of 2.4% back in September without growth slowing down, which is why the stock market soared. And obviously AI helped as a catalyst for that. And also government spending. I have to say that because now that we're seeing government not spend as much money, we're seeing some of the effects of that. However, if growth slows down and inflation slows down at the same time, it just might end up being a recession. And that's kind of what we have to navigate here as well. May we will get a rate cut. Let me see what the probabilities are for May. Currently, rate cuts for May, wow, they're actually at 19%. That's up from 13%. So maybe market is thinking, all right, some of this pain will get Jay Powell to be more inclined. June, we have a 64% chance. So hopefully June ends up playing out, but May, we might see a better chance than what we had a couple weeks ago. Chris is still waiting on the link. Chris, I'll send you the link, bro, but I thought you were, all right, I guess he found some time to leave the wifey to get on the street. I knew he wouldn't be able to resist the markets, bro. I just sent to Chris. I knew he wouldn't be able to resist it. There's no way. There's no way Chris would be able to resist the markets, not with this type of volatility. We're getting a little bit of some green candles coming in. Wow, Robinhood back above 40. Okay, look at that. Got some green in. SoFi back at 1130. Again, one thing we did look at in the pre-markets, Bitcoin being green while the NASDAQ being red is kind of not how it's supposed to play out. So Bitcoin theoretically could be an indicator for why we get a little bit of a reversal. S&P 500 now jumping from 546 to 549. We are seeing some signs of life. Nvda back above 103, 65 now at 104. It's just a question of what it all means going into April 2nd. I mean, any bounce that we have today, again, it's either April 2nd being priced in or it's either a dead cat bounce waiting for April 2nd. Like, it's really hard to trust any of these outside of the fact that we just revisited and made a new 2025 low pretty much across every stock in the past 10 minutes. And maybe that is par for the core when it comes to being a bottom indicator. But I guess we're going to have to see. Now the portfolio is down 25,000. All right. So we went from being down 42,000 to down 25,000. I have a little recovery. Amit, the crazy thing with all of this is you just know this is going to rip faces off once capital decides where to put money. Yeah, I mean, look, that I 1,000% agree with. When the market finally realizes it's stupid for Nvidia and Google to be trading at these levels, they will violently show you how much they think it's stupid. And we will see capital get allocated to the most undervalued companies with free cash flow, share buybacks, and the most healthiest balance sheets on the planet. But the question is when? When does that end up playing out? Look at this guy. Look at this guy.
Hold on 1 second. I just have to connect my audio to my...
All right. This guy's chilling on the beach while all of us are looking at this red, having so much fun.
I don't know if you can hear me, dude. I'm gonna have
Yeah,
to
we can hear you. We can hear you. It's good. It's good.
Okay, it's a little bit windy, so you might get a lot of wind. But basically, this is where I'm at right now.
Yeah, it looks like you're having a good old time. That's what it looks like.
Yeah, dude. I mean, one of the things is when the markets are red like this, I highly recommend people just go on vacation, dude. You know, the hair.
All right, Chris, the wind is kind of bad, so just give me 2 minutes and then we'll get you out of here.
Okay, so basically, the markets are doing what they do. I'm not going to say that this is an absolute bottom, but at the same time, just know that we're getting to levels where the entire market is oversold, you know, and the only reason why we're like literally crashing like this is not because the economy is faltering, but we just have a lot of uncertainty. I think eventually the administration will pivot, and when they do, then it's a good time to buy and just hold on to your dear life, because just like this guy is willing to screw things over, he's going to be willing to stimulate. And
all right, Chris, last sentence, so the wind is too bad. Last sentence. Give me one last sentence, and that's it.
don't buy the dip. Wait until Trump pivots, then buy the dip.
Okay, there you go. Chris, enjoy it. Talk to you later. Dude, Chris is a junkie. He's like, that would be me if I go on vacation, bro. I wouldn't be able to resist. Okay, so Chris says, don't buy the dip, wait till Trump pivots. You know, I can't say I disagree with that. I really can't say I know the dip looks super juicy because it's the new low of 2025. So I don't blame anyone for taking a stab. I mean, later throughout the day, I'll probably take a little bit of a stab at this. But I think the April 2nd pivot on tariffs is probably a much more better indicator when it comes to buying the dip. What I would say is if you don't buy the dip, it's definitely not a sell. Like that's, and maybe I'll be wrong on this, but I mean, does anyone really feel like this is the time to get the hell out of the markets, go to all cash? Like, are valuations that egregious where it's like the fundamentals are so disconnected from reality? Because I don't think that's the case. I think for some stocks, yes, fundamentals are disconnected from reality. That's obvious on certain names. On a lot of other names, I think the fundamentals are relatively undervalued against reality if, and that's the big if we avoid a recession. So I think it kind of comes down to ideologically, do you believe we are having a recession or not? Because if you think we are, yes, you probably get the hell out because consumer spending will slow down and that'll crush everything. If you don't think we get a recession, if you think we get like a pseudo recession, like a 2022 type of recession where it was 2 quarters of negative GDP growth, but it wasn't actually a real recession, then I feel like you just hold on. And yeah, maybe you don't get a beautiful rally, but you also don't get some epic collapse, which means your money is just better being stuck inside of equities versus trying to time it, which again, is just not easy. Just not easy to time it. I mean, everything is making new lows, and yet Tesla's up 10% from the lows this year. That is correct. I mean, the rebound on Tesla has been pretty incredible. And now April 2nd on their deliveries numbers, the analyst estimates are from 360,000 to 410,000. So, I mean, my personal number, even though I really don't have any basis for this, is kind of just like guessing. I think we come in at around 385, maybe 385, which would be similar to last year, only because of this legacy Model Y discount push that they made over the past couple of weeks. I think that maybe gets them another 10, 15,000 cars. The original number was around 365, but I don't think we hit 400,000. I think 400,000 is a dream to get. And if we do, I think the street will be pleasantly surprised because they're estimating closer to that 365. I think it's somewhat in the middle of 380 to 390. Tom Lee said Tesla will lead the V rally. Do you believe that, Mitt? See, that's the part I didn't get from his V-shaped recovery take. He was like, Tesla's going to lead the rally. And I'm like, okay, so you're expecting markets to be, and I guess to Tom Lee's point, like an absolute face ripper. I didn't understand Tesla leading that rally. Like Tesla's risk on because it is one of those stocks that's trading detached from its fundamentals. And we know Q1's not going to be the best. So for Tesla to lead that rally, you would have to assume we are going full on like degen mode, right? And I don't know if that's the type of V-shape that we're going to see if we do have a V-shape. I think we could have a V-shape without Tesla being, $320, $330, which is what I would assume is a V-shape. And that's when Tesla was at like 270 when he said that. So I don't know. I don't know if I necessarily agree with Tesla leading the V-shape rally, but if it does, then yeah, I think it's full on risk. And with tariffs, it's hard to assume that it becomes that risky. People don't care about Tesla today. They invest for the future. Yeah, I mean, again, it's kind of baked into it. If you're buying Tesla, you're really buying it for a large future. However, it is still one of those things where a rebound on Tesla would just be like, I mean, if Tesla goes to 320, 330, if that's what a face-ripping V-shaped rally looks like, where does Nvidia go? Which is fundamentally cheaper than Tesla. I mean, Nvidia, what do we stop? Do we go to, does Nvidia go to 112? Is that our face ripper? So I don't know. I don't freaking know if Tesla is what leads everything. SMCI is green. SMCI 3410, that's about to go green. We are getting green candles across the board. Even Palantir recovering a little bit from 7% to 5%. GameStop, you got a green candle there. Bitcoin trying to get to 83, showing some real signs of strength. The Qs were down 2.4. Now they're down 1.6. And the S&P was down 1.7. Now it's down 0.83. You do have some green candles coming in after about 30 minutes. Amit, when are you taking a vacation? I have no clue when I'm taking a vacation. I am seriously looking at Toronto for April for the meetup. So I will have more details for you guys soon on that. And I think the Robinhood event is going to be sometime in June. So looking into the United Kingdom and France, in which I guess will be a pseudo vacation technically, right? It'll be a little bit of a traveling across the pond. So yeah, but like a full-on sit on the beach type vacation, I don't know, bro. If the beach doesn't have Wi-Fi, I'm leaving the beach, bro. I'm leaving the beach. Amit, are you actually coming to Toronto? Yes. It's looking like April 18th. I don't want to confirm it yet. I will probably put out the form in like 2 to 3 days, and then we'll officially get it in motion. But yeah, it looks like mid-April. We're coming to Toronto. And we'll see if the markets are green by then. Getting a bit of a recovery here, dude. It's not too bad. Nvidia 103 to 105. I'm trying to see if there's any headlines that came out or if this is kind of technical. I don't see anything crazy right now. We did get a bunch of stock upgrades this morning. It's like a lot of the banks came out and they started upgrading. Celsius was one of them. Maybe that's because they're seeing some peak fear. Mateo, good morning. What's up, brother? Thank you for being here. Amit, you're not a beach guy. That is correct. I'm not a beach guy, dude. Like, bro, like on the beach, just sitting, like, again, if I have Wi-Fi on the beach, I don't mind being on the beach. If I'm just looking out into the ocean, bro, like, I would be a little bored. The S&P 500 is on track for its worst monthly return since September 2022. Wow. Okay, there's a headline. The worst relative performance for U.S. stocks versus global markets in 23 years is going to happen in Q1, which is ending today. This is the worst performance for U.S. stocks versus global markets in 23 years. That's a bit aggressive. Yes, Bitcoin is green. Bitcoin is green currently right now. That's helping out a little bit. Bitcoin right there, 82.7. MicroStrategy, we talked about them. They bought Bitcoin. Stifle maintained a buy rating on Tesla. They lowered the price target from 455 from 474. They said, we are reducing our near-term delivery forecast to reflect the role of the new Model Y, as well as headwinds from the anti-Elon Musk crowd. As we have documented with data from the Stifle think tank group, Democrats' favorability rating on Tesla has plunged. We are updating our forecast to reflect lower near-term sales from 474 to 455. We expect share price volatility to persist in the near term, but remain optimistic on Tesla's medium to long-term prospects. To me, that's not even a downgrade, bro. 477 to 455 is really nothing. I mean, they're still well above where the stock is right now. But they are factoring in headwinds from the supply chain on Juniper, and then obviously the anti-Elon Musk hate that we've seen over the past week. Michelle, thank you for the $5 super chat. Appreciate you. Appreciate you, Amit. Buy yourself a mocktail. I will take that $5 and go get some water, since water is technically a mocktail, right? No alcohol. If you guys want to be all technical with the definitions, I'm gonna drink some water today. I'm gonna buy one of those waters with, what do you call those things in the water? It's not electrolyte. It's something else that's in the water that makes it super expensive. I'm gonna buy a $5 expensive bottle of water. That's gonna be my mocktail today. Because there's no alcohol, So there you go. There you go. When you have Starlink, why do you care where you are in the beach or a desert? That's a good point. And, maybe Starlink's going to start clearing that up. By the way, the Wi-Fi on United, when I was on the way to California, it was better than before. I mean, it's not Starlink level yet because that's not hooked up, but it is getting faster. And so I imagine on the airplanes eventually it's going to get really good. Robinhood, wow, it wants to get to 41 today. We are getting a little bit of a bounce here, guys. Maybe 10:30 things reverse. Is gold going down? Gold is still up, so markets are recovering a little bit with gold up 1%. Tesla right back to 250. 244 seem to be the low of the day so far, and the S&P 500 back to 550, up from 546 on the low as well. Dude, I want to get that Saratoga water, bro. We had that at the Hood event. They had it was good water. I need to buy me a case of that Saratoga water. I need to just have it on the stream every day, just drinking it. That would be hilarious. Alkaline, yes, that's what it's called. Alkaline. That's the expensive water that we need to get. Okay, let's talk a little bit about Tesla. I said we would look at this over the weekend, but the Tesla protests have started to get pretty aggressive, like really aggressive. And there was a dealership, I think it was in California or something, and it was just like, it was the people, they laid down on their backs to not let you enter into the store. And it was pretty aggressive. There was, I'm not finding the exact videos, but here's just a couple of videos of showing what it's like. Look, this is definitely having an impact on the brand. I think no one can say it's not having an impact on the brand. This is just one of many protests that we had across the entire weekend. I think it was kind of like this, there's this group called like Tesla Takedown or something. It was an organized effort across the entire country to have these Tesla protests. Oh, New York City. New York City was the one where they laid on their backs and you like couldn't enter the store. So, yeah, I mean, look, the brand is definitely getting some hit when it comes to what's going on with Tesla. Some analysts are underestimating the extent of the brand hit, and they're saying that it's not as bad as people think it is, and overall sales will be fine. I mean, look, money talks. You give an $8,000 discount on a Model Y, you're going to get people wanting to buy those, and all of those were sold out, even with all the anti-Tesla Elon backlash. But yeah, I mean, it's going to be interesting to see how Tesla thinks of it and what they say on the earnings call in a couple weeks as they navigate this. Let's get a little update from the markets, and then we'll keep going from there as we see more of these headlines.
Puts the businesses on the side for a while in terms of capital investment and so on. I think we saw underlying the goods orders data that seemed to show like some front loading of activity, front loading of pieces and cars from abroad. I think the capital investment is probably going to be on pause for a little longer. And households, as you pointed out, I mean, households show a lot of uncertainty, show a lot of diminished expectations, deteriorating sentiment, and very sharply rising inflation expectations this year.
How do we think about also, though, the currency impacts with some of this and other countries potentially manipulating currencies as a counterbalance?
Yeah, I think the currency is going to do its thing. I mean, in response to a slowing economy, our exchange rate strategists, I mean, think that the dollars tend to come out more strong in response to the overall global disturbances here. So they expect like some appreciation of the US dollar, which of course doesn't help US exporters in that context.
Here's a chart right here by Chris that I think is actually a good chart as well. The median age of viewers for cable and broadcast TV is 64.6, with Fox having the youngest median age, 58, and CBS having the oldest, 67. So, you got a lot of these protests, and a lot of these protests obviously do end up getting influenced by the media. And if the media is touting that Elon is the worst person in the world, and there's not a lot of new media to combat mainstream media, yeah, you're going to get some ugly reactions and people that end up getting influenced. Also, Elon Musk's previous son, now daughter, Vivian Musk, did an interview over the weekend, a long interview with a streamer called Hassan Manabi, I think his name. I forgot his last name, but Hassan. And he's a super progressive, like Twitch streamer, like left of left. And they did an interview, and his daughter was basically saying that, quite frankly, to sum it up, Elon's a piece of shit. I mean, it was 90 minutes of Elon is a piece of shit. Now, granted, I think they're 19 years old, 18 years old. A lot of their, I mean, when I was 19, 18, I had some stupid opinions. I still have some stupid opinions. And so I wonder if their view of the world changes as they get older. But as of now, you could tell the interview was vehemently against capitalism, vehemently against Doge, and vehemently against Elon's personal political ideologies when it comes to a variety of social issues that his daughter is not a fan of. So, yeah, I mean, when all of this to say, Elon's brand right now, yeah, it's taken a hit. And if you buy Tesla, it's kind of just, you're overlooking that. But nonetheless, it is a risk. I just think the people that are really buying Tesla, they just don't care. They think long into the future, robotics, FSD, et cetera, what the world looks like. Short term, though, yes, that is definitely going to cause some pain. Doug says that is nothing more than a son who is pissed at his dad for not loving him enough. You know, I can't disagree. I mean, when you lose your dad in your life, when you lose your father, when your dad acts like they don't care about you or whatever, and Elon obviously has a lot of kids, he can't. I think there was a quote from him who he literally said, "You can't win them all," when he was talking about his kids, and he was kind of just like, "Yeah, like some of them are going to hate you. You can't win them all, and like when you have 13 of them, the probability of 1 or 2 of them not liking you because you probably didn't spend enough time in their life. Yeah, I mean, like that's probably a higher probability than not." But the point is, when they're doing those interviews as publicly as they're doing and kind of, making the arguments they're making about Elon, that obviously doesn't help as well. Let's get an update on the tariffs. We got a news bit right here, and then we'll keep going from there.
Happened this week. The president
tariff wave on Wednesday. Those are the still unknown reciprocal tariffs will be rolled out. That secondary tariff on buyers of Venezuelan oil will take effect. The auto tariffs, of course, will take effect. And the president will decide whether to let the pause on those Canadian and Mexican tariffs expire as scheduled. A White House official here told me the president has yet to make that call. And so with so much taking effect at once, Trump trade advisor Peter Navarro over the weekend said that he expects the tariffs to raise $600 billion in revenue every year. And that sparked widespread speculation that the president could be planning to go bigger with the reciprocal tariffs than we had recently been thinking.
So again, that $600 billion number, I mean, like, maybe it's true, maybe it's not. I'm leaning towards it's not true, just looking at some of the fundamental numbers. But that's also probably a reason why the markets tanked last night, because everyone was like, oh, if he's actually assuming they're going to make over $500 billion a year in revenue from tariffs, they're going to implement some pretty large tariffs. And that's why I think people are also afraid of April 2nd.
For comparison, $600 billion a year, that is more than the U.S. took in corporate taxes last year. That would be roughly the equivalent of a 20% tariff on everything that the U.S. imports. We don't know that that's where they're going, but a lot of speculation there that might be the end result. So the upshot, guys, I would just say is that April 2nd, that Wednesday, looks less and less likely to deliver the clarity that the market has been hoping for. Guys.
Yeah. Megan, that was the subject of our conversation at the top of the 9 a.m. The lack of clarity, I think, that many investors are now starting to concede is likely to come. And again, you make the point. I mean, the president's going to have it all in front of him. He likes to have that optionality. He likes to be the ultimate decision maker, and not just on any given day, but every day. And so I guess the question is, what are we going to get on Wednesday, but what are going to be the key components of it that mean it could go up or could go down or be rolled back? Is that potentially going to be a part of whatever the discussion is?
It sure could be. I was surprised to hear from that White House official that I mentioned that the pause on Canada and Mexico, it's already been written into law that will expire on Wednesday. I was then told that maybe that won't happen. So that could be a way that maybe he softens the blow of the reciprocal tariffs is by extending the pause on U.S.
Interesting. So sources are saying that Mexico and Canada get an extension of the pause, which would be bullish, but then Trump implements harsher tariffs on the rest of the world. If that's the case, then we're just going to be playing this tariff game for the next couple months. I mean, if we extend Mexico and Canada again, there's going to be another April 2nd that we have to look forward to.
USMCA compliant goods from Canada and Mexico, even while rolling out what could be much larger tariffs to come. David, to your point, I think there's a couple things going on here. One is that the president likes this optionality, and I think a lot of this uncertainty is by design. This White House thinks that it gives them ultimate negotiating power with trading partners if those countries don't even know what to offer, that they're just sort of offering anything they can to try to get around this, and they sort of like some of the confusion The other thing is that it appears to me that there's very much an internal debate on this White House going on about what exactly would be the best path forward to limit some market uncertainty or limit the hit to economic growth while still having maximum impact and fulfilling the campaign promises that the president ran on.
This is a chart that Chris just sent. Take a look at this. Average tariff rates on U.S. imports. In 1830, we were at 57.3%. In 2010 or 2008, it was 1.2%. Trump 1.0, we bounced up to, call it 4%. 2024, it was 2.4%. And the expected number for 2025, or this might already be baked in because we have the steel and aluminum tariffs already in place, 8.4%. We have not had 8.4% average tariffs on all imports. The red one is if Trump's imposed tariffs to date are permanent. Okay, so if Trump's imposed tariffs are permanent, not including the new ones, we would have 8% average tariffs. The last time we had that was 1950. 1950. So we would be going back around 70 years in terms of the tariff overall average rate. 1933, it was 20%. 1899, it was 30%, 1868, 40%, and then 1830, 57%. Realistically, since 2008, since the great financial crisis, it's been 1%, 2% max, 2024, 2.4. And now it's coming up to almost 10%. I guess we're going to see how this plays out, dude. I mean, at this point, I don't know. I mean, what they said right there, right? That we're going to delay it from Mexico and Canada for a month. Like, if we delay it from Mexico and Canada for a month, then yeah, we're going to be in this little back and forth when it comes to waiting for these different doomsdays that decide the trajectory of tariffs. Look, here's my overall take on this. Like, just to make my position very clear, I'm not selling anything because I don't think this is the time to sell. Am I super excited to buy stuff? No, but I've been buying all year anyway. So it's not like, you get that excited to buy again. It's like, look, we've been buying the dip keeps on dipping. We'll take certain stabs at it and try to get the prices that we can that are the best. But I am not a get out of this market. This is a recession and just being cash. That's not my take here. My take is that it's going to be choppy, but eventually we come out on green because this tariff volatility will resolve itself. I just don't know if that's going to be 3 weeks, 3 months. And if it's 3 years, then it's 3 years. I mean, eventually we're going to have to find out how this plays out. But I don't know, dude. This is not the environment where I'm like, all right, if you bought freaking Robinhood at 45 and now it's at 40, do you sell all your Robinhood? Like, no, I think you DCA into it, knowing that it can go much lower. So it's not one of those things where it's like, all right, this is the time to pivot and get out of everything. Again, I think the time to do that was in February. And if you did that in February, congrats. If you didn't, it's just a hard sense of timing that you need to be able to do. Chris says, think of it as an 8% tax on all goods sold on aggregate. Correct. Which means a correlation between the amount of tax revenue the United States collects if there's an 8% taxes on all of our products and services. Again, this is a global paradigm that the Trump administration is pivoting to. And that global paradigm is primarily marked by tariffs and like the type of free trade that we've been engaging in. Number 2 is geopolitical instability and volatility. Obviously, Russia, Ukraine, Israel, Hamas, Europe has started to become mobilized more in terms of their defense spending. That's a new paradigm that we're entering into because the United States is becoming more isolationist. So we've got wide stream tariffs across the entire world, theoretically. That's a new paradigm on free trade. We've got a American isolationism paradigm that's causing Europe to get causing Europe to spend more money when it comes to self-defense. And then third, we have a paradigm of government spending and less government spending. So you've got wide stream tariffs, more American isolationism, and then way less government spending. These are 3 entirely new paradigms on how the global economies correlate with the geopolitical aspects of what affects our day-to-day lives. And I think no one was honestly prepared for those 3 to come into conflict as soon as they did. Even though Trump kind of ran on those 3 ideas. He ran on the idea of not spending a lot of money to solve the world's problems, aka being more isolationist. He definitely ran on tariffs, even if no one believed him. And then Doge, yeah, that became a thing close to September, October before you had a chance to vote. We knew that Doge was going to be a thing and that Trump would allow Elon to do what he's doing. It's just now all three of those things are actually happening. And as a result, we are seeing the market react to that. Did you see the update Figure just posted? Did Figure just post an update? Let's see. Did Figure post an update? Oh, yeah, we got a new video from Figure. BMW and Figure. Okay, so Figure is a robot company. Let's see if, let's get an update on some cool shit. It's better than the market's tanking. I'm going to turn the audio off because the audio is probably copyrighted. But this is one of their first commercial clients, BMW, for Figure. Let's see. Does Figure use NVIDIA? Yes, they have NVIDIA GPUs for inference training across all their robots. All right, so we're seeing a robot work on a car. This is in South Carolina, which is where the BMWs are being produced in America. All right, you're seeing the robot continue to work. I think we've seen the robot do something similar to this before. Again, I know some people may be saying it's slow. I get it, but like to me, this is just overall progress is kind of what you're looking for to this for this to become a reality. Okay, so that flipped areas, and now you have other robotic arms working. This facility is crazy. They crank a new BMW off the line like every 45 seconds. Wow, I didn't know that. I didn't know that. Again, I don't know how many robots they have at this facility in South Carolina, but I guess they have enough where they want to really start experimenting more meaningfully. Okay, cool. So that was the update. So obviously Figure's not, the robots are not doing anything too crazy. They're doing just attaching these parts here and there. But the fact that that's even happening, I think the trajectory obviously is going into the future. We're going to see these robots do a lot of crazy things as they continue to train. Let's see if he said anything. Brett said it's critical to have humanoid robots in the real world at scale. As more robots are deployed, costs will decrease and intelligence will improve. The one thing I'll say is that, we haven't seen any of this from Tesla yet. And I'm sure Tesla's working on stuff. We just haven't seen a ton of stuff from Tesla necessarily showing these robots doing a lot of this stuff. But hopefully we're going to see those updates soon. Yeah, they're dropping a lightweight piece into a place. That's correct. I mean, they're not doing anything crazy there, but they're doing stuff that obviously can be replaced over the long term. Okay, let's get another update in terms of how tech stocks are doing, and then we will keep going from there.
Performing sector so far this year, with the Mag 7 index largely underperforming the S&P 500. Christina Portsanevelis is looking at the recent weakness in tech, and there's a lot of it. Hi, Christina.
Hi, Courtney. Well, I like to say that the Mag 7 lost their magic in Q1 2024, really transforming from market darlings to what Bank of America calls them the Magnificent Seven. The group has been down 12 of the past 13 weeks, dragging down the NASDAQ 100, which is almost down 10% quarter to date, correction territory. But let's specifically look at these numbers. Nvidia, Alphabet down over 19% quarter to date, Apple dropping 13%. Microsoft is headed for its fourth negative month in a row, something we haven't seen since 2009. And there really are three key factors driving this bearish turn, specifically in tech. First, the generative AI narrative has lost momentum. We know that since DeepSeek entered the market, investors are realizing AI can be built more cheaply. There are many headlines. The Information today just reported some large cloud customers slow AI spending, so adding to that momentum down. Second, confidence in tech earnings is deteriorating, though Triviat Research notes S&P 500 earnings have only been revised down 1.6%. So that may not be reflecting the bearish sentiment as a whole.
And that's what I mean when it comes to earnings growth. Earnings growth only going down 1.5% across the Mag 7. It should not have Google and Nvidia trading where they are right now. Now, if earnings growth really does come down, 4, 5, 6%, then yeah, I guess you could say that Nvidia and Google, Microsoft, they deserve to get hit the way they're getting hit. But if they still put up the numbers, this is just a question of sentiment. It's not a question of fundamentals.
Lastly, these tech giants have lost their defensive market positioning. Bank of America points out that tech is really showing its most negative correlation to defensive sectors just in years. But there's a twist. Amid this tech wreckage, especially on the NASDAQ, China internet stocks like Baidu, Alibaba, Tencent, Xiaomi, and you can see on your screen a sea of green quarter to date, along with traditional telecom names like AT&T. They've actually outperformed the NASDAQ. And so what we're seeing is as Wall Street tech darlings really fall from grace, yesterday's overlooked sectors are quietly stealing the spotlight in this market reversal, Carl.
Christina, good setup for our next conversation. Thank you, Christina Partsinevelos. We turn to chips specifically this morning. The SMH is on pace for its worst month since December of 22. Some pain for Nvda in particular, coming off the 5th negative week in 6 and bound for its 3rd month of losses in 4. Joining us this morning, Wedbush Securities analyst Matt Bryson's with us. Matt, it's good to talk to you again. Thanks for joining.
Thank you so much for having me.
You've been on the road in Asia. Generally, you're still pretty confident in the Nvidia forecast, right?
Yeah, definitely. I mean, in January, there were some concerns. Blackwell did not ramp initially as expected, but it really feels like their new chips are getting to where they need to.
This guy definitely looks like he just got out of the gym. It's either that or he's been up all night taking calls from clients about why he told them to buy Nvidia, and he's just sweating from all the pressure. It's one or the other.
And if anything, we're seeing a bit more demand from China in particular around DeepSeek.
Can you talk? I mean, a lot of this is addressing what's happening with customers, but like, for example, the concerns around Microsoft spend and what kind of shifts are happening in there. How are you explaining those kinds of things to clients?
Yeah, with Microsoft, so the difficult piece with Microsoft is a lot of what they've been spending on is for OpenAI. And so what we've seen over the last 4 weeks, 5 weeks, maybe a little bit longer since Stargate was announced, was some of OpenAI's needs maybe getting met by Oracle, maybe getting met by SoftBank. So with Microsoft in particular, I think you have to think about the fact that they're both spending for themselves and they're spending for OpenAI, and there may be a little bit more of OpenAI's needs coming from other places than would have been expected.
Which again, I don't think is necessarily bearish Nvidia, but it definitely feels like the CapEx trade could be theoretically slowing down, if not accelerating at the pace the market wants to see. Eventually, we'll get Nvidia numbers and we'll know for sure, but I think that's how the market's interpreting it. Wow. Okay, so 1030 hits, and we go from 551 right back down to 549 on the S&P. Tesla goes from 250 right back down to 245. This is what I mean by, like, it's really tough to just say, all right, I'm getting in. Like, if you're DCAing, you're DCAing, and it is what it is. You accept whatever price you get. But if you're trying to strategically be like, all right, that 250 on Tesla was the bottom because it bounced up from 244. Well, we're basically right back to 244. I mean, Nvidia 103.85 all the way to 105.90. All right, I'm buying Nvidia 105 because we're done. Right back to 103. Like, it is a choppy market. And like, quite frankly, DCAing is the only, either you're in cash or you're DCAing, because trying to find a bottom here and swing trade, I think, is a bit tough. Meta right back to 560. I mean, Palantir 81.70. Palantir is actually holding up nicely. Got a little bit of a green candle right there, up from 78. But still, that's down 5% of the day. MicroStrategy is down another 2%. Bitcoin's been holding up today, which is nice. Grab is at 442. That's up from 438. Nubank is up from $9, but still, that's down 3%. All the data center plays, VST, Vistra, VRT, they're down 7% of the day. CrowdStrike, cybersecurity, that's down 5%. Grindr somehow is green with Celsius, along with quantum computing, that's up 1%. D-Waves down 0.5%. IONQ down 1%. Rigetti is basically flat, and then AMD just above 100 right here, 101.5. Where's Amazon? Amazon 185. That one's still down 3% of the day. Robinhood just tweeted. Let's see what Robinhood said. Today is the last day to do a portfolio transfer on Robinhood on March 31st. Okay, this is kind of cryptic. I don't know what this is. Are they about to sponsor NASCAR? From the pit to the portfolio, we're taking it to a higher gear. Buckle up. You think this is like a F1 promotion? You think they're sponsoring F1 now? That's immediately what I thought. F1. Fast lane, smart gains. That's immediately what I thought. All right, maybe they're going from the NBA to F1 now. Well, let's see. Looks like they may be expanding the advertising here. Again, I've never been a big fan of sports sponsorships, dude. I don't watch sports, so I don't like to assess the brand value from your logo being on a jersey. To me, has always been like I never cared about it. Like so, those things do not get me excited at all, and I definitely don't use that to assess my qualitative understanding of the brand and its marketing. Like I really don't look at the sports stuff as like a big input. I just think it's one of those things you do when you're a company because like you kind of have to. Like, did Palantir really get that much brand awareness from being on a logo in Formula One? I don't really. It's a small little thing, right? But like, you just kind of got to do it to be associated with the big guys. That's how I think of it. Maybe there's some incremental brand recognition, but unless you're like SoFi Stadium, right? American Airlines Arena, like when you own the arena, Staples Center, like when you own the name, then I think it's like really intense. If you're a logo on a jersey, I mean, it's like it's good, but it's not like that would not be my go-to-market if I was a public company. I think we would need a lot of other ways to market. But yeah, more people see the brand logo, then more people get familiar with it. CoreWeave down 9.9% on the day. Again, if this thing just doesn't go down 20%, I think it would be a successful IPO, but this one's nasty. This one's very, very nasty. Chris just sent me a Peter Lynch clip. Let's take a look at this. Brad posted a timely reminder from my favorite investor. All right, here we go. Let's get some Peter Lynch to deal with the volatility today.
Study history, and history is the important thing you learn from. What you learn from history is the market goes down. It goes down a lot. The math is simple. There's been 93 years a century. This is easy to do. The market's had 50 declines of 10% or more. So 50 declines in 93 years. About once every 2 years, the market falls 10%. We call that a correction. That means that's a euphemism for losing a lot of money rapidly. But we call it a correction. And
that's actually hilarious. It's definitely a euphemism for losing a lot of money quickly. You know what? We just had a little correction. I just lost like $100,000. That's all.
So 50 declines in 93 years, about once every 2 years, the market falls 10%. Of those 50 declines, 15 have been 25% or more. That's known as a bear market. We've had 15 declines in 93 years. So every 6 years, the market's going to have a 25% decline. That's all you need to know. You need to know the market's going to go down sometime. If you're not ready for that, you shouldn't own stocks. And it's good when it happens. If you like a stock at 14 and it goes to 6, that's great. You understand the company, you look at the balance sheet and they're doing fine, and you're hoping to get to 22 with it. 14 to 22 is terrific. 6 to 22 is exceptional. So you take advantage of these declines. They're going to happen. No one knows when they're going to happen. It would be people tell you about it after the fact that they predicted it, but they predicted it 53 times. And so you can take advantage of the volatility in the market if you understand what you own. So I think that's the key to element. Another key element is that you have plenty of time. People are in an unbelievable rush to buy a stock. I'll give you an example of a well-known company. Walmart went public in October of 1970. 1970 went public. Already had a great record. It had 15 years performance, great balance sheet. You could have waited 10 years saying you're a very conservative investor. You're not sure this Walmart can make it. You want to check. You see them operate in small towns. You're afraid they can only make it in 7 or 8 states. You want to wait till they go to more states. You keep waiting. You could have bought Walmart 10 years after they went public and made 35 times your money. If you bought it when they went public, you would have made 500 times your money. But you could have waited 10 years after Walmart went public and made over 30 times your money.
I definitely agree with Gene in the chat that it's bad when we're going back to the 80s to listen to Peter Lynch videos, bro. That's how you know it's bad. But not that the actual economy is bad, but that the sentiment is so bad that we need Peter Lynch to remind us that, yes, stocks do indeed go down sometimes. I mean, there you go. He's right. Nothing he said is wrong. I mean, he's the GOAT, right? Everything he said is absolutely correct right there. It's just a question of being able to navigate it. Here's a little bit of hopium for everybody. April has been up 16 of the last 19 years. 16 of the last 19 years, there is an average gain of 2% on the S&P 500s. And it has happened 16 of the last 19 times. So now granted, maybe we fall 5% before we go up 2%, but April tends to be green. So hopefully that helps us get a little green. Now the problem is, again, this April has April 2nd, which is turning into this freaking this thing that all of us have to deal with. I don't think a lot. The other Aprils probably had their own versions of April 2nd, but this one seems rather dramatic, at least right now. And eventually we're going to have to see how bad it actually gets. Bitcoin right here, 88.3, S&P, little recovery to 551, Tesla from 245 to 247, Nvidia from 103 to 104, but still the broader market's down about 3 to 4% across the board. Is April 2 priced in? You know, given the pain we're seeing today, I mean, yeah, I feel like it is getting priced in. I mean, it started last night. As soon as futures took a nosedive last night, I think it pretty much started to get priced in. Now, granted, how aggressive is Trump going to be? I don't know. I don't think any of us know, but I'm still calling a little bit of BS, dude. I'm still calling a little bit of BS on him being so bad. And if it's not as bad as we think, then I think Tom Lee's thesis of that face ripper, I mean, maybe it happens. But I just like, do we have the sentiment ready to have a real face ripper right now? Granted, we tend to have a face ripper when the sentiment is so bad, and we shouldn't have a face ripper, right? So, yeah, I mean, theoretically, if there were to be a face ripper, it would be when shit hits the fan. Doug says, I don't know if April 2nd is priced in, but the fear about April 2nd is definitely priced in. Yeah, I think that would be the best way to summarize it. I think that would be the best way. Again, March, historically, after the election year, you tend to bottom mid-March. That almost happened exactly March 13th. We revisited those bottoms and made new bottoms today as we end out March. So April is just going to be interesting because theoretically, 2% up, 16 out of 19 months. We should be closer back to that 200-day moving average on the S&P if it holds from these levels. If not, this is going to be one of those Aprils that breaks history. And definitely breaks history in the context of the March bottom that's supposed to happen on post-election years in mid-March. Where's the 10-year? Is the 10-year spiking? Oh my God, dude. Why is the 10-year up? Why is it up? No. I mean, the answer to why it's up is because they expect tariffs to be inflationary. But this going up with stocks going down is not good. This is also another reason we kind of need Doge, regardless of if you love Elon or not. Like, if we're going to enter into a world where tariffs are the de facto policy, and tariffs obviously are going to create some level of inflation, you need the market to be excited to buy bonds. And the only way to get them to be excited is if they think inflation is coming down. How do you get inflation down if you have tariffs? You need to cut spending, which means Doge needs to work. And if Doge does not convince the market that the government will stop spending as aggressively as they have been, and you have tariffs creating more inflation, and take a look at this chart right here, this is from the Michigan survey studies, consumer inflation for their median 5-year expectations is as high as it is, which means confidence is going down. If you don't have that happening at the same time, then yeah, you just enter into a really volatile market. Like, if the market does not feel that Doge is going to meaningfully decrease government spending and tariffs are going to meaningfully increase inflation along with consumer confidence going down, I mean, gold becomes the asset, right? Money market funds become the asset. I don't know. It becomes aggressive. It becomes very, very, very aggressive if that narrative plays out in this way. Did Buffett see all of this coming? You know, he's heavy cash right now, and he's not really deploying it. Buffett has $325 billion in cash outside of some of the stuff he's doing in Japan. He's not really meaningfully deploying that cash yet. When he starts buying, maybe at least he's calling a bottom. But the question is, what does he buy, right? Like, what does Buffett take that Bank of America type of stake in that he got in 2008? I don't know if it'll get that bad for him to get that type of a stake, but I keep saying PayPal is what he should end up. I mean, he could take such a big position in PayPal, and just the level of confidence the market would have after Buffett discloses he's long PayPal, I think would be tremendous. But maybe, if consumers stop spending that much, payment transaction volumes start to go down a little bit. I mean, like, you could see a bad effect on PayPal if we have consumers stop spending. So there could be a lot of different areas that he's looking for that aren't necessarily as safe, even if the fundamentals are good right now. Why would he buy PayPal over SoFi? I just think the buybacks on PayPal is more of a Buffett-esque type of move. Remember, SoFi is still a growth stock, and Buffett, outside of Apple, he doesn't really seriously allocate capital to growth. He allocates capital to something that he knows is super safe, and that if they miss their estimates one quarter, they're not going to tank 30%. So SoFi is not in that situation. SoFi needs to grow, and they need to grow dramatically for the market to even think of giving them a meaningful multiple. So I don't think he would go down that route. I don't think it would be horrible to get SoFi. He's not doing Palantir as much as I love Palantir or Nvda. He's not touching those. I feel like Google is easy right now, but I don't think he's touching Google either. Like, I think these tech names that he's been opposed to for his whole career, he's not going to flip just because they become that much cheaper. Granted, if he does, then it might be really interesting, because that would be the first time in a long time where he actually takes advantage of some like really hardcore dip that we see in the markets. But I don't think that's the place. Yeah, he might just end up buying Oxy too. He might just end up buying Oxy, which I don't think would be horrible either. Here's what Dan Niles had to say about a lot of this volatility. He posted this last night. So he talked about CoreWeave, and he said, hey, without Nvidia, the deal wouldn't have closed, which was already a red flag. Then he says, this tough IPO also follows the statement on 325 by the BABA chairman on US data centers, who said, people are talking about $500 billion, several $100 billion. I don't think that's entirely necessary. I think in a way, people are investing ahead of the demand they're seeing today. This in a vacuum does not bode well for how CoreWeave is likely to trade this upcoming week or related AI names. Having said that, the reaction of this market to April 2nd reciprocal tariffs is likely to be the biggest driver of stocks this upcoming week. Then on AI, he says, near term, I continue to believe there's a killer consumer app for PCs or smartphones that drives inference demand. AI CapEx spending by mid-year will be going through a digestion phase due to a slowdown in training demand. The largest AI models are already training on all the relevant data available on the internet. I believe, in addition, that foreign companies have bought as much AI chips as possible in front of potential upcoming export controls, aka they loaded up before tariffs. This has likely overstated demand in the near term. Spending is already forecasted to slow to mid-single digits sequentially during the first half of 2025 versus the mid-teens sequentially during 2024 for the largest AI CapEx spenders, basically the Googles, Metas, Amazons of the world. Also, CapEx depreciation may need to increase given the useful life on existing AI infrastructure is depreciating more quickly. Over the past several years, most large internet players have increased their depreciation life of their compute infrastructure to 5 to 6 years. This has shifted costs from the income statement to the balance sheet, which has benefited EPS. But with Nvidia now on a yearly cadence for introducing new chips, this is probably too high and will need to come back down. As the Nvidia CEO said on March 18th, I said before that when Blackwell starts shipping in volume, you couldn't give hoppers away. There are circumstances where you are fine, not many. This is an added risk to earnings guidance for the largest hyperscalers as we go through 2025. He then continues to talk a little bit about Cisco. He's not realistically comparing Nvidia to Cisco the way a lot of people do, but his broader argument is his final sentence. To be clear, I am not saying this is what I expect from Cisco. It is just a historical reference to compare Nvidia's revenue growth as the key enabler during the current AI investment cycle so far to what Cisco's growth was as far as one of the key enablers during the historical internet infrastructure build-out. He's actually bullish Nvidia. Like, Dan Niles is not bearish Nvidia. He's bullish on broader AI CapEx being built out over the long term. He just thinks in the short term, there's going to be an AI CapEx digestion phase, which could lead to valuations getting hit in the short term. But with Nvidia releasing a new chip every year, and if that new chip actually lives up to its promises, then he does feel that companies will reaccelerate their CapEx every single year. It's just going to be a question of at what rate are they going to end up doing that in relationship to Nvidia's current earnings trajectory. Palantir right here, 82.21. That's down about 4%. Celsius still green on the day, up 6.5%. Just incredible. Berkshire just went green, probably because Apple just went green. Apple 218.99. Looks like the market is trying to get a little bit of safety in Apple right now. as the rest of the Mag 7 are green. SMCI is red, or sorry, the rest of the Mag 7 are red. S&P is still down about 1%. Bitcoin, 83.2 on the day. What else? Buffett's buying GameStop. Well, GameStop has a lot of money. They're buying a ton of Bitcoin. GameStop down 4% right here. But I don't think Buffett would buy GameStop. Someone says, I'm selling Palantir and I'm buying Palantir call options, strike $100 for the end of 2026 to release some capital. Look, I don't hate the idea of buying calls over buying stock because it's a more efficient use of capital. However, I do think you got to be careful here, right? Like, theoretically, should Palantir be $100 by the end of 2026? Yeah, I would say so. If earnings growth can continue to maintain momentum and the market continues to feel this multiple is applicable. However, I mean, you just never know, right? If 2026 ends up being the effects of the tariffs and we enter into a bear market, like, it's going to be really hard for Palantir to be 100. It's going to be really hard for a lot of these stocks to even be at these current prices if we do get a full-on bear market 2026. So look, calls are getting cheaper right now. They're cheap compared to the current macro environment. If the market really takes a hit, these cheap calls are going to get much cheaper. And although it frees up some capital from selling the shares, it could still get pretty ugly going into the next 2 years. And again, I'm not saying like the next 2 years are going to be a bear market, therefore that's why you don't buy the calls. It's just the calls do have an expiration, right? And so if you're buying calls right here, it has to be your highest conviction, and you have to really believe that the valuation can hold up in whatever macro in a few years. Like, for example, I think Robinhood, no matter what happens in 2 years, will be above $20. Will it be above 40? I don't know, because the next 2 years could be aggressive. Maybe it's not above 40, but I think but that's deep in the money right now, right? So it's not going to be that cheap because you're paying a premium for it being deep in the money. But I'm comfortable at the end of 2026 with a $20 strike on Robinhood. Am I that comfortable with a $50? I mean, I don't know. I don't know if it can hold up there. So it really, really is just a question of the strike versus the macro condition in 2 years. Tesla right here at 247, that's down 5.9%, rebounding a little bit from 244. But that one's still down on the day. The volatility cost of buying calls is very high, 100%. 100,000%. Is very, very, very high right now. And quite frankly, I'd rather buy calls when I have a little bit more of security that the market has bottomed, even if you're not buying it before the bottom. So like you're paying a bigger premium. But at least that premium has some more peace of mind. This is why 2023 was easy when it came to buying calls, like on anything. Because Tesla at 100, Palantir at 7, Hood at 7, Apple at 120. Like it was kind of obvious that a lot of these stocks would end up outperforming. Now, I didn't know Palantir would get to 100. I didn't know Hood would get to almost 65. But still, like you felt they would be higher than $7. This market environment is just a bit different. It's just a bit different in terms of where the volatility is. Yeah, you want to buy calls when the market is boring, 100%. 100%. And right now, it is an ugly, ugly downtrend right here. And I have calls on Hood, by the way. Like I own calls for 2027. And even with that, I'm saying I expect it to do well. But even with that, you just got to hope that the broader market can hold up. S&P 551, Tesla 247. Again, there's a lot of Tesla 900, 840 strikes that are being bought up. So you either got some big retail whales or some hedge funds that are like buying the crap out of these super long dated out the money Tesla calls. And, they are trying to call a bottom with those purchases. They're trying to say, hey, this thing is stupid. The story of Tesla will be explosive. And this is a great opportunity. But I think a lot of us just don't know right now. Celsius 8%, bro. Holy freaking crap. This stock, man, if you were overweight Celsius at the beginning of the year, what can you say? Congrats, bro. I've definitely taken my shots at this stock. I did not think it would be outperforming. I did not think Celsius. Forgive me for not thinking Celsius would outperform Nvda and Google. I got that wrong. But I mean, this is the discords you should buy, bro. If someone called Celsius over Nvidia, that's the discord that's worth buying. But I think I think most of the market did not expect that. I still don't know why Celsius is up. Like, don't tell me the Alani acquisition is why, because I'm not buying that. Like, that's not. And don't tell me the growth, because I'm like, well, Nvidia is growing way more than Celsius, so you can't tell me it's the growth. Like, you can't tell me it's the safety, because Google compared to Celsius is a no-brainer. So I feel like there's an Illuminati of Celsius investors that are just hyping this thing up. It's got to be something like that. Something happening that's keeping it up. How is it a recession hedge? Like, would people drink more Celsius in a recession? Let me call Steve. Let's see if he picks up. He said he wanted to be on the show today. I don't know if he'll pick up. Let's see if he can call in. That's true. It was down 80%. That is fair. It was down pretty badly. But still, even with all this volatility, for Celsius to be up is kind of crazy. Okay, yeah, Steve can't pick up right now. We'll try to get him on the close. He wanted to be on Friday, but he just couldn't make it. So we'll try to get him on later today. Shout out to Matt. Matt was bullish on Celsius. I think he wrote an article about Celsius a while ago. So Matt was a believer in Celsius. Celsius pumping because the algos think it's Coca-Cola or Pepsi. Dude, you guys saw RFK came out on Friday and he was like, we're going to ban people who are on food stamps from buying soda with the food stamps. So Coke and Pepsi got hit on Friday because they were like, all right, a significant cohort of our demographics are not going to be able to buy this if RFK lets this go through. But they're up today. So market still rotating into a little bit more value, and Celsius being grouped in with that. Is Verizon green? Verizon is also green. Dude, if Verizon legit outperforms Nvidia by the end of the year, what a 2025. If freaking Verizon outperforms Nvidia. Verizon year to date is up 13%. Holy crap. Nvidia year to date is what, down 14%? Down 24%. I was being a little too generous there to Nvidia. I mean, let's do a poll on that, dude. Let's do a poll. Let's see how bad sentiment is. I'm still voting with Nvidia outperforms Verizon. That's my poll, or that's my vote. Let's see what we didn't even talk about the biggest news on Friday, bro. We didn't even talk about the biggest freaking news on Friday. Hold on. Let me ask this poll, then we'll talk about that. Which one outperforms by end of year? Verizon, Nvidia. The biggest news on Friday after the market close, outside of the Trump pharma tariff headline, was XAI bought X. This thing caught me off guard, bro. I did not expect that to happen. XAI, Elon's AI startup, bought X.com, formerly known as Twitter. Elon said both XAIs and X futures are intertwined. Today, we officially take the step to combine the data, models, compute, distribution, and talent. This combination will unlock immense potential by blending XAI's advanced AI capabilities and expertise with X's massive reach. This is an all-stock transaction. The combination values XAI at $80 billion and X at $33 billion, $45 billion less $12 billion in debt. So he got to sell X for basically the exact price he bought it for, $44 billion. And that means the valuation of the two companies together is now $113 billion. Okay, so I thought this was big news for a couple reasons. The first reason is that I think it's a good idea. I think X as a standalone company is probably not going to have an easier way to get to survive, because the advertising, the Elon hate, yada yada, people boycotting X, all this stuff. Like, as a public company, Twitter was doing about $4 billion in revenue every year. I think X is probably doing half of that right now, maybe a little bit above half, 2.4, 2.6 billion. And I think their path to going public is not likely, just because it's not TikTok, it's not Instagram. They don't have 1 billion users. You have to really care about like reading stuff on X. It's not that sort of dopamine filled content you get on Instagram, TikTok. Now, maybe that's going to turn into those platforms, but right now that's not the case. So I think X is a standalone social media platform, does not have the merit to go public, even though I'm super bullish on it. I use X every day.
Number two, I think the acquisition makes sense because XAI is generating a lot of their data from X. Like when you ask XAI or Grok a question, it pulls in a lot of tweets as the sources for their info, aka they have real-time data. This is something that Google doesn't have as easily because they don't necessarily own the data. They have to scrape the web. And then OpenAI doesn't have access to any of this stuff. So I think there's a world in which the proprietary data that X has, which is only going to grow and grow and grow as the platform grows, is going to feed the models for XAI. And then that should be feeding the models for Optimus as XAI creates a brain for Optimus, and for Teslas. You should be able to get into a Tesla and say, hey, Grok, take me to Starbucks, and not do anything. And then it just, boom, you're good to go, right? So I think a lot of the training data should be valuable to XAI. The question is just going to be how valuable it is. I also think this bails Elon out, right? That this really bailed him out. I mean, X as a business is not doing that well. A, because people hate Elon, and B, because the advertisers aren't really there. Like, you just don't have the biggest advertisers in the world that want to advertise on a platform where the owner is associated with being a Nazi, right? And so from that perspective, I think now he doesn't have to worry about monetizing X. It only has to be monetizing XAI. And XAI has an asset, which is X, that allows them to essentially build new real-time models. Real-time data can be incorrect. Yes. I mean, look, there's two problems with the real-time data on Twitter. Number one, a lot of it is bots, and a lot of bots post a lot of idiotic things, which hopefully now Elon has an incentive to get rid of bots because he doesn't need to prove that X is like some big platform that's thriving because it's owned under XAI. It doesn't need to go public one day. So maybe the incentive is more aligned to get rid of bots using the AI features in XAI. And number two is a lot of times real-time data is bad from users, right? Like, I could tweet something, I could make a mistake in what I tweet, and then X could be training off that data. However, I think you easily resolve that by sourcing the best data, right? So, like, look, I know Bloomberg has got it wrong a bunch of times, but Bloomberg is going to be more right than not when it comes to just reporting real-time updates. They're going to post their updates on Twitter. So Google and OpenAI have to get permission to go into Bloomberg's website. X has the data because Bloomberg wants the distribution. So Bloomberg tweets out the headline and maybe a paragraph of the article on X, and then XAI just trains from that info, which hopefully should be better than a random person reporting on something that might not have the right sources. And so I think there is an argument there for it to be resolved. And Arnie makes a good point right here. Also, Elon does not need to sell Tesla shares anymore to fund the debt that he went into to buy X, because now that debt is being subsumed via XAI. And if you invested in XAI, shout out to Derek. Derek invested in XAI at 18 billion back in June. I mean, you're up 4x, right? Now it's 113 billion. So the XAI investors must be loving this if they invested early, because they're up 4x in a year. And they get to own what one could argue one of the biggest assets that is out there when it comes to real-time information. Let's get a take of this from Lightshed, see how they think of it, and then we'll keep going from there.
XAI has now acquired X in an all-stock transaction, values XAI at $80 billion and X at $33 billion. In a post on X, Musk saying, quote, XAI and X's future are intertwined. Today, we officially take the step to combine the.
This was sort of always the plan, that this was sort of, everyone sort of wondered, like, why is Elon buying X? Like, why does he want to own Twitter? What is this really about? And I think as you look at sort of the AI arms race that is really unlike, if you look at the capital that's being spent and how intense the competition is between OpenAI and Google and Anthropic and X and Meta, this is an arms race of epic proportions. Here's Elon. He buys Twitter, has this incredible source with hundreds of millions of people creating exclusive data, information that flows through X every day. Sure, Threads exists and Blue Sky exists,
Right.
but none of them have caught on.
Rich,
like, you're
Rich,
there,
I need
but
to
no
stop.
one's really using
I
it.
need to stop you just so we're on the same page and we're looking at the same set of facts. And I'm a big fan of a lot of the things that Elon has done. But let's just go backwards and go through the history of this, because you're making this out as if this was the original plan. And I just would recite to you what actually happened in reality, which was he wanted to buy X. At the time, said it was because it was a town square that he wanted to create a sort of a full town square where all sides could speak political sides. That was the original intent. and at the time also said that he thought it could become a financial services company. That's what he said publicly at that time. He then decided actually that he didn't even want Twitter at one point, and actually went to court to try to avoid having to buy Twitter. So the idea that this was preordained from moment one is a little bit of a stretch, I think. Okay, then he gets it. The value drops precipitously, just what it was because of advertising and the like. And at the same time, he starts to build XAI and gives a percent of that business to the folks who owned X, in part, I think, not only because they were using the data, but as a make good for the fact that the value had dropped as much as it had. You can continue from there, but that's actually what happened.
I don't think you can dispute any of those facts. What I'm getting at, though, is a town square. Like, what was the ultimate purpose of building that town square? And we can debate whether it feels more biased one way or another. I'm sure everyone has their opinion of like what actually is happening on X. But
what do you mean? There's not a debate about it, Rich. Do you think there's a debate?
What I mean is there is still more dialogue that happens on X every day than what I see happening on Threads and on Blue Sky. Like
100%, but it's not. It hasn't turned out to be. Just look, and I say this just factually. It's not about having a political view. It hasn't turned out to be what I think the original intent was. You agree with that?
I would agree with that.
Okay, I just want to keep the facts. Because when we started this conversation, it sort of went into this other place as if you were suggesting this was sort of the plan from moment one. And that he was the Messiah. And by the way, he may be the Messiah. I'm just saying it didn't happen that way.
I'm just saying we all were wondering, why did he want to buy it? Sure. Did he want to get out of it? And remember, we were on CNBC talking to you why he wasn't going to be able to abandon the deal, that there was no way out. But I don't think he actually wanted out as much as he wanted a much lower price. He realized he was massively overpaying, and that's Elon's mistake, and that's his problem. But the idea of having a global town square, having all of this information where, look, Andrew, I know
agree. I'm just saying Rich, all I'm suggesting is it was a pivot. I'm saying I don't believe, and I
think Sorkin made his point. This is just, you don't cut them off this. I mean, like, we got his point. We got it. We got it. Elon didn't really have this master plan. He wanted to buy it to save free speech, whatever. But now this is just getting ridiculous.
I think you believe, maybe you do, that the original intent was an AI-focused intent, that he was going to hoover up all this data, that was the reason he was purchasing it. And I don't believe if you go back at all within the first 12 months of the purchase, before or after, that was part of any of the discussion.
We weren't even talking. I mean, OpenAI hadn't even broken onto the scene. We weren't talking about AI at that point.
That's my point.
However, what is inside Elon's brain and what was really going on is something that we're never going to really know. What we do know, Andrew, is that going back to that original why Twitter, why X, was because it had incredibly unique information that couldn't be found anywhere else on real-time conversation all around the world, and had failed to live up to its potential under prior management. That's the facts. And so whether he paid the right price or not, whether he realized he was going to shift this into AI or into some other thing, the idea was he had an incredible amount of content and real-time information that couldn't be found anywhere else. And I believe
100% aligned
what's
in that
happening.
regard.
And what I believe is happening
Rich, it
is
took
he is
10 times
worried.
as many employees to make sure you did nothing on the laptop or the Wuhan lab origin. So, get rid of 90% of the employees and actually start putting every side of an issue on Twitter. So I would say Messiah, yes, at this point, whether he lost or not. But what did you say?
What I'm
he
getting
might
at,
be the
Andrew, and what I think is really
I say he might be the Messiah. I'm not saying he's not. I'm just saying
this was so bad, bro. This was so bad. The whole point of what the guy's trying to say is that X's data will be useful for XAI. They spent 7 minutes trying to get him to talk about Elon's true motives. Like, that's not relevant here. The whole point is that XAI is buying X and that the data is going to be valuable. That's the only point the guy wanted to make. This is where sometimes CNBC gets annoying, dude, because they all have their own agendas and they want to like impose it on the guest and make the guest feel. It's like, dude, like, yeah, maybe Elon did want to do that, maybe he didn't, but like, that's not the guest's point. His job is to analyze a transaction for his clients to understand what's going on in the media landscape. That guy, Rich analyzes Netflix, Spotify, all those companies. Obviously, X is a big player when it comes to media. And so the analysis of the deal is pretty simple. They're buying X to get the data. That's it. That was horrible. That was not good. That was like two hoses tag teaming a guest to try to just like barely get a word out. But regardless, look, that's my point. I think it's going to be a good transaction for XAI. I think it's going to help XAI, and it saves Elon's ass when it comes to making X a profitable company, because he's got enough companies he's got to worry about for it to be profitable. Also, speaking of Elon, Neuralink came out with an update today, and Neuralink says that they are now close to being able to solve blindness in a human being. So the first Neuralink chips are about to get installed into certain individuals that are blind. And the idea here, Elon said it will be low resolution at first, but over time, the impact will enable vision that is like superhuman. And this is going to be happening in late 2025. It's called Blind Sight. That's the name of the chip. And this device aims to restore sight to people who are completely blind. See, when you see this type of stuff, this is when, no matter how much you hate Elon or hate his politics or whatever, there's really not a lot of people on the planet that are trying to bring eyesight back to people who are blind. And it's like, I think everyone objectively can agree this is a good thing, because not being able to see is, one of the parts that is very just important in human life. And it's an amazing experience to be able to, and so we take it for granted how much like we have the ability to be able to actually see the world. For you to put a chip in someone's brain and for them to be able to reestablish your sight, I mean, that's like crazy, dude. Who would have thought of that years ago or even centuries ago? But all of that is tinted by the level of disgust people have on Elon's politics. And that's currently the landscape, I think, that Tesla is struggling with at the moment, because obviously it's affecting Tesla stock as well. Nvidia 105, Reddit 101, Tesla 249, trying to make a little bit of a comeback. Hood trying to get to 41. Palantir actually doing a great job, dude. It was down 7%. Now it's down 3.5. Palantir really holding up. Apple establishing a bit of a green base right here, 219, and then Bitcoin 83.5. I think the market's trying to call a little bit of a bottom here. Will we get it? Who knows? But we definitely are going a bit more green as we get into the latter part of the day from where we opened up. What did you guys say on the poll? Let's see. Nvidia or Microsoft? What did you guys pick? I'm going to go 60% say Nvidia. Oh, 81% say Nvidia. Okay, cool. So we're not that bearish yet. The day that becomes 81% Verizon has to be the bottom. Right? There was no Microsoft in the option. Well, that's because Microsoft, I mean, I'm not expecting much out of Microsoft this year, dude. Microsoft is the only Mag 7 that isn't up year over year. Like, this one's just been disgusting. This one's been in the absolute gutter. They've grown organically very nicely, but I don't know if the street really feels there's this like huge core AI bull case thesis right now. And if they're slowing down some of their CapEx spend, that might be good for their margins, but that's also something the street is trying to figure out when it comes to Nvidia. All right, I think that's pretty much it. Is there anything else do we got going on this morning? No, nothing. That's pretty much it. PMI was the big headline today. Oh, here's a headline. China. So this is coming from the Chinese state media. So take it with a grain of salt. But China, Japan, and South Korea reach a consensus that the three sides will jointly respond to the U.S. tariffs. Uh-oh. That's Japan and South. If that's correct, again, that's Chinese state media. So I don't know exactly if that's correct. That's what Bloomberg's reporting. China, Japan, and South Korea want to work together to deal with tariffs. See, this is what Chris was talking about last week. We don't want our allies working with our adversaries. South Korea and Japan are some big allies. if this is correct from Chinese state media, and again, take it with a grain of salt, this Chinese state media would love to have you think that they are working with U.S. allies. So this could also be fake. But from what Bloomberg is saying, China, Japan, and South Korea reach a consensus that the three sides will jointly respond to U.S. tariffs. Like we should not want Japan and like if Japan and South Korea did that together, sure. But when they start working with China to come up with a tariff strategy, like that's not good, bro. That's not. Now, again, if Trump sees this, I think Trump wouldn't care. I think Trump wouldn't give. I think Trump is getting to the point where he genuinely does not care about anything other than implementing this tariff agenda. That's what I got from the interview on NBC on Sunday. But if we lead Japan and South Korea to the CCP, that's not good for us. That is not good for us at all. Oh yeah, here's some clips. Okay, so here's some clips on Trump. If you guys didn't see this yet, here's a couple clips from that Air Force One interview. Let's take a look at that, then we'll be done for today. Of Trump talking about tariffs.
We put secondary tariffs on, as you know, in Venezuela, and it's had a very strong impact on Venezuela. You know that every ship just got out and they left. A lot of them left. They dropped the hoses right into the ocean and they left. They didn't want to be there for a minute because they didn't want those tariffs to catch on, or they didn't want me to see them there. So the Venezuela secondary tariffs.
And then here's another update on what he said about tariffs.
Tariffs will be far more generous than those countries were to us, meaning they will be kinder than those countries were to the United States of America over the decades. They ripped us off like no country's ever been ripped off in history. And we're going to be much nicer than they were to us, but it's substantial money for the country, nevertheless.
That's when he talked about the pharma headlines as well. The reason the audio is not the best is because they're on an airplane. There's Howard Lutnick right there behind him. April 2nd, I wonder if it's actually going to be in the Oval Office, if it's going to be a big press conference. I think they're going to make it a grand presentation, given they're calling it literally Liberation Day. But I guess on April 2nd, we'll see how it plays out. Let's close out the day with this. So these are the NASA astronauts that were rescued after being stuck in space for 9 months.
To President Trump and Elon Musk. I respect you. I trust you. You've given me no reason not to trust you, either one of them. What they say, I can't say what they say. I haven't lived that. But I have no reason not to believe anything they say because they've earned my trust. And for that, I am grateful that our national leaders actually are coming in and taking part in our human spaceflight program, which we see is hugely important global significance, and they take an active role. And based on the past and what we see now, with them doing that, it's refreshing. Not just refreshing, it's empowering. It's strengthening for our nation. I think it's a good thing for our nation when the national leaders, especially something that has high visibility, are involved in the process. And I'm grateful for that.
And I'm just glad that they're involved and they take notice. And our situation, I think I've mentioned before, maybe wasn't the perfect situation, but allowed a lot of people, including the president and Elon, to look at what's going on the International Space Station, take it very seriously, and understand that our involvement as a country, as a spacefaring nation, is really important throughout the world. And it sets an example, and it shows, our ability to be able to do the hard things, put people in space, operate in space, work in space, and then bring us back. It's important, and I appreciate that them and many, many, many more people took notice of it.
I think we all can appreciate that, right? I mean, these astronauts were freaking stuck in space for 9 months. Like, even if they hate Elon or hate his politics, I mean, because of SpaceX, they are now back on Earth, which is good, right? That's a good thing. That's not a bad thing. And it just speaks to the level of animosity and polarization we have in the United States. You got some people that love Elon, some people that hate Elon, some people that hate him but also understand how many good things he's doing, and some people that just vehemently dismiss everything about him. And I guess as a society, we will eventually have to figure out where the Elon hate or Elon love ends up going. And April 2nd is going to be a big day for the Tesla investors, because if that deliveries number is not good, you might have a lot of people that love Elon and are overlooking all this stuff and might start hating him if their stock and their personal net worth starts to get hit. But granted, April 2nd, I think a lot of the fears of deliveries are priced in. It's just a question of how bad is it going to be. And so hopefully, if it's around that 370, 380 range, it might not be as upsetting as people think it is. Ending out the day, Tesla 249. We'll be back on the market close. Robinhood 40.87, Palantir 82.51. Apple is green, SoFi 11.38, PayPal 64, Amazon 185. That's basically flat since the open, but that's down about 3.5%. Gold continues to go higher. Bitcoin, digital gold, also goes higher, up 2.5%. S&P was down almost 2%. Now it's down 0.65. So that PMI read, along with a couple other headlines, probably helping the S&P stay afloat from 546 to 552. But by the end of the day, we'll see where we end out for the last day of Q1, which is kind of crazy that we're ending out Q1. I don't think anyone expected Q1 to be as volatile as it was, but here we are. And so Q2 officially starts tomorrow, and we'll find out what direction the market decides to go. Word of the day, I don't know how the hell to say this. Elucubrate. I'm going to go with elucubrate. Elucubrate. Let's see. Elucubrate. Okay, not too bad. To produce something by long and intensive effort. After months of research, the team finally managed to elucubrate a groundbreaking theory on black hole formation. The architect elucubrated an innovative design that blended sustainability with classical design. Elucubrate, to produce something by long and intensive effort. Well, I guess Trump is trying to have the country elucubrate cars and everything else, as he wants manufacturing to return to the United States. And in 3 days, we're going to find out how serious he is about it when it comes to tariffs. Oh boy, this is if you said that during a traffic stop, you would get a DUI 100%. 100%. You would get a DUI. All right, guys. I think that's it for today. We'll be back on the close. For anyone who's super stressed out about this, I think the best advice is just to not look at the portfolio. Take a little bit of time off from it. Go for a walk. Do something like that. If you're not heavily leveraged, crazy on margin or anything, and you kind of don't have to actively manage it, because if it just goes down, it's just numbers that are red on the screen, then I think that's the approach right here. Again, I do think, and I said this as soon as the show started at 8:45 in the morning, I think we are closer to bottoming than not, because we revisited the lows. We made a new low. Tariffs volatility has to be, in my opinion, at least to an extent, priced in, given we're down about 4% from the top last week at 576. So I think we are closer to bottoming than not. But then again, it depends on how bad April 2nd is going to be. And Tesla deliveries will also be on April 2nd. So we'll get a lot of data later this week. That's going to be on Wednesday, right? Yeah, Wednesday. All right, 2 more days. 2 more days. And then we'll see how this plays out. All right. Thank you, everybody. Appreciate you all. We'll be back for the market close at 3:45 Eastern. Bye, everybody. Have a good one.